Welcome to the free 4+ hour trading course. What you're about to watch is 100% my best project so far that I've put months into making. And I want to tell you that this is not some repackaged how to read candlesticks course. This is the most complete course that will take you to profitability, and I put it on YouTube for free. And I'm 100% certain that this free course is more valuable than most paid courses out there. I say this because this is literally the system that I teach my students as well. My students that were able to become profitable, get huge payouts, and eventually quit their jobs. This video represents the knowledge I've gained in the last 8 years into one compact video. You have to know that this video is not for complete beginners. If you've never seen a chart before, if you've never traded, I would recommend to you to watch a beginner's course, because this is for the traders that already have some time in the markets but cannot get their first payouts, or they're not able to scale up. Now, we will cover bias, liquidity, risk structure, daily routine, psychology, the best pairs to trade, prop firm systems, basically everything that you need in order to get your first payout or your 10th payout will be covered in this course. So, if you're serious about getting your first payout or getting your first withdrawal, and you're tired of blowing challenges, not following your system, being inconsistent and confused, I want you to completely focus on this course and make sure you're doing it distraction-free. Now I want you to take notes, and I want you to focus on everything that I'm going to teach you in this free 4-hour course. And if you do, you will completely have changed as a trader at the end of it. I am very confident that this course is everything that you need going forward to get multiple 6 figures in payouts out of the markets. That is really how good this course is if you give it your full attention and you do everything as laid out in the course. As a side note, you can also watch this in the free community. It will be divided in chapters, and you will also have access to other resources. There's a link for that in the description. Now that being said, I want to be as real as possible, because I know how hard it is to know who to trust, especially in this trading space. So right now on the screen you can see my results from last month, and basically this is a statement from my prop firm account. Right? I'm trading with Apex Trader Funding, and these I've pulled directly from my prop firm account. You can see me do it right here on the screen as well. I'm doing this so that you know I am legit. I'm trading multiple accounts at the same time, so I'm also getting multiple payouts at the same time. Now, these are the payout certificates. These are the results from the month before that, and these are the results from the month before that. Now, the reason that I'm showing you this is to be as transparent as possible, to show you that I'm actually making money with trading, that I'm actually living from trading, and that I also know how to make money with prop firms. Because being able to live from trading or making money with trading is still something different than also making money with prop firms. So before we can fix a problem, we need to know the exact reason why you're failing at this moment, why you keep failing challenges. And it really is not your strategy, it is your decisions. Now, this is you, right? This guy right here with the phone. You understand trading until real money is on the line. You've blown a challenge here and there, doing something you normally wouldn't. You switch strategies after a few losses. You consume content but nothing actually changes. Or you hesitate, overtrade, or break rules when it matters most. If even one of these sounds familiar, I want to say to you that you're not the problem, neither is your strategy. But the real problem is that you don't have an objective standard. That is really where it all starts. No clear rules will make sure that your decisions will become emotional. Now, if you add money on top of that, you will see immense inconsistency, because this will only amplify this one right here. Now, this inconsistency, it leads to these numbers. These are numbers from my forex funds. I don't know if you guys remember them, or if some of you do. Probably not, but it is a prop firm, and I used to be funded with them quite a bit of capital, and they got shut down by the SEC. I think now probably 3 years ago. But these were some stats from them. So this is from trading 3 years ago, and now I think it is probably even worse. But for phase 1 passes, there were 10% out of the 5,718 participants, people that bought the challenge, right? So that is around 572 people. Now, out of those 572 people, only 24% passed phase 2. Right, so that is then 137 people. Out of those people that went to phase 2, only 3% got a payout. That means that out of the 5,718 people that bought a challenge, only 4 people got a payout. And the reason that this happens is that Everyone is stuck in this loop. I think 90% of the traders that try something like this don't have clear rules or not clear enough, or they don't know that they're not clear enough. The decision will become emotional. They're adding money on top of that, and they have massive inconsistency. So this will bring you inside of this loop, right? No system, emotional trading, bad decisions. You blow up the road to blown accounts. And I want to be clear about something. It doesn't mean that you cannot trade, right? It means that you've been trading without structure, without a system, and you've been guessing instead of executing. You've been relying on emotions instead of rules. So now that you know the main pain points, in the next chapter, I'm going to give you the exact structure that removes emotion from your trading. So now we come to the real gem of the video. It is a great trading system. This will become your new reality. You really have to pay the full attention that you have. Take notes on what I'm about to tell you right now. And as you can see, we will go into every step of the system right after. Okay? From bias alignment to the trading journal to improving your psychology. Literally everything will be covered inside of this video. Now, the trade grading system. It is a system that removes emotion from your entries, and that is exactly what you want as a trader, or at least as a profitable one. So it is very simple. Every trade gets a score before you enter, right? No more, I feel like this will work. No more hesitation, no more overthinking. The trade literally decides itself. So the rules, there are 10 points in total. 5 criteria and 2 points per criterion. Some can be weighted heavier. So, as an example, you have your bias alignments, 2 points. Key level entry, 2 points. Liquidity mapped, 2 points. Entry confirmation, 2 points. Optimal risk structure, 2 points, but this one we do not have. Then we have an 8 out of 10. Now, the score will replace your emotions. That is going to be the mega play behind it. So, before, you would have an emotion and then you would trade. No system, you decide and your emotions take over. So you see something happening on the charts, you get excited, you get FOMO, maybe you get scared. Whatever it is, you take a position and you lose. Now in this video you will learn a system will equal a score and this will equal a trade. So you have your system, the score decides whether to take it or not, and your emotions are literally irrelevant. And I want to make something clear that this is not a new strategy, right? It is not a holy grail. You don't need to change how you trade. You don't need to learn something new. You keep your current setup. Whatever you've done that worked, that you have data for, by the way, you can keep that. We're just adding this on top of that. This system literally filters your trades, so only high quality ones get taken. And this is something that you can copy immediately. You have your bias alignment, your key level entry, liquidity target plus taken, your entry confirmation and your optimal risk structure. You can weigh this however you like. In this video I kept it very easy, 0, 1 or 2. But in this example as well, I weighted it a bit heavier, 3, 1, 2, 3, 1. You can do this however you want. This will also depend on your own strategy. So you will no longer be trading based on how you feel. This one, for example, is 10 points, and then we take the trade. So we have our bearish market structure, the bias and alignment with a bearish trade. Market structure is bearish, so it is plus 3 points. We enter from a key level, plus 1 point. We have our confirmation, plus 3 points. We have the optimal risk structure, plus 1 point. Liquidity target has been taken, plus we have the target right here, plus 2 points. This is how we want to approach it. Now, of course, this is not the whole video. I'm gonna teach you how to see everything in detail. What makes something a bad score, what makes something a good score, right? The good trades, the mid trades, the bad trades. Plus we will also talk about psychology, the best pairs to trade, the best trading sessions. Like I said before, we will cover it all during this video. What the system will do is that it will lead to no FOMO, no revenge trades, and no second guessing. If it is not an 8, it is not a trade. Keep that in mind, okay? If it is not an 8, it is not a trade. So now that you know that, I'm going to break down each of the 5 criteria so you know exactly how to score your trades. Hey, I'm interrupting this video really quickly to ask you for a favor. If you're enjoying this, please leave a like down below and also leave a comment, perhaps about your favorite part of the video so far, or about something that it is that you already learned. I've put months into this course and would highly appreciate you helping me out, pushing this to as many people as we can, so that we can also impact the trading behavior of as many people as we can. Thanks a lot in advance. Now it is time to go in depth into each chapter that we just spoke about. So we have bias alignment, the key levels, liquidity, or entry confirmation. This is a big one, by the way, or risk structure. And last but not least, we'll be doing a grading exercise to make sure you understand everything completely. So let's start at the beginning at the bias alignment. So first, a quick definition. Bias alignment is trading in the direction of the higher time frame. Actually, to frame it even easier, it is when time frames are aligning, right? It's the most simple definition that there is. But to make it make sense, you want to have them aligned with the higher time frame. So, very important question to ask yourself is that, are you trading with the higher time frame or are you fighting it? Basically, are you trading in the same direction as the higher time frame or are you trading against it? Very important that you know that. So, this is what I use, right? For day trading / scalping, you can do this. Higher time frame is the daily and the 4 hour. The middle time frame, like I like to call it, is the 1 hour and the 30 minutes. And the lower time frame is the 5 minutes. Very important, execution only. Now, I did mention for day trading and scalping, but then again, in scalping, you also have some differences. Some people, they trade on the second charts or on the 1 minute. Then it will be very different for you. But let's say you're just a day trader and you execute on the 5 minute, like I think most of us do, then this is what you want to use. The lower time frames will tell you when to enter, and the higher time frames will tell you where to enter. And this is something that I see a lot of people get switched up because they are stuck to the lower time frame and they also think that the lower time frame tells them where to enter, right? But that is not the truth. Also, this one, take a screenshot from this or write this down because nobody is really telling you which time frames to use. These are the ones that I use for higher, middle, and lower. Now, how to identify your bias? Step 1 is confirm your bias on the daily and or the 4 hour time frame. Like I said, for the high time frame, I will be using the daily or the 4 hour, but sometimes I don't really look at the daily because the 4 hour is giving me all the context that I need or vice versa, right? So right here we can see the bias is long, the daily is creating higher highs and higher lows, and it is trending up higher, right? Very easy to spot, higher highs and higher lows, okay? Then for a short bias, the daily, again, or the 4 hour, is creating lower highs and lower lows, and we are trending down lower. Easy to spot as well, lower lows, this one is lower than this one, lower highs, this one is lower than this one, same thing here, lower low, lower high, lower low. This is a very good exercise to do for yourself because this will really teach you how to read market structure and how to mark that out for yourself. Then we come to step 2. Step 2 is wait for the middle time frame alignment with the higher time frame or take a calculated counter trend trade. So on the left, we have our long bias. We see that we're switching from lower lows and lower highs to higher highs and higher lows. That happens right here, right? You have your high, low, lower high, lower low. Then this basically is all irrelevant because where the switch happens is right here, right? This is the last high that made a new low. Okay, this is what a lot of people get twisted up as well. So the switch happens right here. This will give us a bullish bias. And by the way, this is constantly the same chart, but just zoomed in on different time frames. So that's also a very nice add to this exercise. Then we have our short bias. We are switching from higher highs and higher lows to lower highs and lower lows, trending down lower, and we have a bearish bias, right? So higher highs and higher lows to lower highs and lower lows. Then step 3, go to the lower time frame to look for entry criteria. The 15 minute and below, you can enter on the 15, you can enter on the 5 like we talked about before. You will be zooming in and waiting on the entry criteria to be hit. Now what those are, we will come back to that in a later stage in the course. But for example, right here, this could have been a very nice trading position for our long bias. Then we have our short bias, again zooming in and waiting on entry criteria to be hit. This could be a short position. Now, how do we score our biases? Let's start with perfect alignment and with the 2 points. 2 points is when the higher time frame and the middle time frame are aligned. So the higher time frame is obviously bullish. I should have made the example a bit different. So for example, like this, where it is very clear that we were already bullish before the middle time frame even formed. Then the middle time frame also switched bullish, right? And this is now a perfect alignment. Now, 1 point for a counter trend trade, a calculated one. Why not 2 points? Reason is that if you're trading against the overall bias, even though you want to do that, it is still not as high probability as having a perfect alignment. So that's why we're giving it 1 point. This means when price is coming up bullish, but you enter, for example, a POI, right? An order block, you take out a previous high, whatever it is, and you expect price to make a pullback. That is when you will have a 1 point trade. Then 0 points, no determined bias. This is basically for whenever you're taking a trade in the middle of nowhere. Price is obviously bullish, price is obviously still going towards a previous high, but for some reason you take a short position. Or like we did in our case right here, price did take out the previous high and you still take a long position without waiting for it to pull back. So maybe because you think you have a perfect alignment, you don't wait for the shift on the lower time frame, you don't wait for the key level to be hit, something that we will talk about in one of the next stages as well, and you take a completely wrong trade. Now, I talked about this when I said taking out that previous high. I like to call this, and my students know this, I like to call this trading from point A to point B. As simple as it is, right? This means that price makes a pullback, okay? And point A is basically the starting point of the new move and also your potential trade. Now, point B is going to be your target, and point B always is above a previous high if you're long, and always is below a previous low if you're short. Point B can also be a point of interest area, so an order block, a fair value gap, but there will always be a main point B that will be the high or the low. So in this case right here, point A is when the pullback stops, and let's say we have a shift right here on a lower time frame, so I know, okay, this is point A. Then we have point B above that previous high because we still expect price to have that continuation. Now let's say point B has been hit. Then point B becomes the new point A, right? Because whenever a high gets taken out, we always expect price to make a pullback. This is always the most likely scenario to happen. Even if price rallies through a bit higher, still you expect it to make a pullback. Now, don't expect price to make a pullback after every high that gets taken out, purely because not every high is as strong as you think it is. It only is a strong high if it is a swing point like we marked out right here, right? So the highest point, for example, that made a pullback, not just any random high in between. Now, the new point B, like I said, can become or a liquidity point or this low down here. Now, what is the most likely scenario that will be hit? Point B right here, or point B beneath this low. The most likely scenario to be hit is this point B right here. Reason is, we are bullish. We don't want to see this low being broken because that would shift market structure and basically mess up our whole bias. So we can see, okay, price comes to point B, and point B becomes the new point A, and our new point B becomes this high right here. In this example, we have a reaction of a fair value gap. Now, what I always want to bring to your attention is that you have point A to point B on a lower time frame, but you never want to forget the higher time frame point A to point B, because this little bit of price action right here is actually this move in a very big downtrend move. Okay, where your point A started here, your point B is, for example, here at the highest fair value gap that we have in this downwards move, and this is now the end of this position right here. Now, point B has been completed, so point B becomes point A, and this point A that we had right here becomes point B, because now you're looking for price to continue down lower and take out this low down here. Now, I want to make this a lot more clear, so we're gonna dive into the charts. So this is just a simple dollar chart, a simple DXY chart. What we're gonna do first is we're gonna determine our bias by marking out the highs and the lows. So we have a low right here, then we have a highest point, this makes a new low, it makes a lower high. This already tells you enough, right? If this one happens, you know, okay, it failed to break the previous high, it respects the previous high, so it is most likely to break down lower, and it does. Now, when we're looking at this, there are basically no real new highs formed inside of this move, but to create a bit more context and not just look at it like, okay, it made a super big down move right here, we're gonna do it like this. We have a low right here, and we have a high, right? This low broke underneath this low, providing liquidity, moved up higher, and then we started moving down lower again. We have a low, we have a small high right here, We have a new low, but it doesn't create a high. So we wait for a new low to form that does create a high. And then we have that right here. We have our low. Then we have our high, higher low, higher high. In between, there is no high form that creates a new pullback. This high creates a pullback. Then we have a bit of a mess internal structure right here. I'm not going to mark that out right now. Then we have a high and a low. I want to provide more context why I don't mark any of this out. So it is important to understand the rules, right? In a downtrend, the high that breaks the previous low is going to be your swing high. The low that creates a pullback is going to be your swing low. Okay? So in order to continue this downtrend, we always want to look to break this low down here, right? So that we're continuing lower. If let's say we stop right here, there is a very big chance that this will be a higher low right now, and this high will be targeted. Because this now is a weak high, as it was not able to break the previous low. So what you will see is that it will be targeted like this, and we will move up higher. Now, depending on the structure, depending on the time frame that this plays out, it could be that we've now completely changed market directions and we continue up higher, breaking all the previous highs that we had. This also provides context that this high made this previous low. And remember, only a high that breaks the previous low is relevant, and only a low, or in an uptrend that we are right here, only the low that breaks the previous high is relevant. So the lowest point right here that broke the previous high is this one right here. This is the high, as this one broke this previous high. As you can see, it was just a liquidity grab as we completely turned around right after taking it out. We will talk a lot more about liquidity in one of the next segments. But what happens then? Price bursts down lower, taking out this low, moves up again, making a new high, making a new low. This right here, a lot of wicks, a lot of liquidity grabs. I'm just counting this whole area as a low, moving up higher, failing to break the previous high, reacting on this small order block that we have. Then we move down lower again, breaking the previous lows right here. And I will come back to this in a second, how I look at this. Price makes a new high, and this one breaks it as well. Now, to zoom in on this, is I want to add something. I want to add that I always look only at the body candles that were made on the higher time frames. So right here we can see, okay, price did below it, but we did respect it, closing above this low. And as you can see, we are moving up higher. Right here, we did close below it, and we're moving down lower, right? Here as well, price now moved above and the wick and the body candles. But what we can see, body candles taken out, not really making displacement move above it, and moving down lower right away. Now, what is very important is internal structure as well, because we want to see alignment. So this area right here is a very good learning area. Price was moving bearish at this stage in price, right? We can all see that. The high that needs to be broken on the hourly to switch to bullish is this high right here, right? We had a very small pullback, then we moved down lower beneath this low, and we started moving up higher again. Now we have internal structure right here, right? Let's go to maybe the 10-minute even, and let's have a look what that looks like. Okay, so from this point on the hourly, we want to look for bullish positions. Now we want to look for bullish positions until a POI. Again, more on that in a second, but we have an order block right here and we have a value gap right here, right? Two POIs that can be your point B. Talking about that, let's mark that out. Point A, and let's say point B2 and point B1, right? This is point B1. So those are your two targets that you have. And then you also, of course, have a third one, and that is your point B3. Point B3 is these previous highs right here. Now, a lot of things can happen in this chart. Of course, we need to start with the higher time frame first to know the overall time frame so that we know, okay, do we actually want to target point B3? So let's go to the 4 hour, even the daily. Let's have a look at this right here. Price is moving down, sideways, taking out these lows down here, moving up higher. But if you're looking at daily market structure, it's irrelevant until we break this high, which we have right now. Now we're messing around and we have just taken out this previous high right here. Okay? So what does this tell us? This tells us that we are bullish, that we want to see price going up higher. But it also tells us that point A to point B right here has been completed, right? This was your point B. So your point B becomes point A, then the previous high, or somewhere in between, like for example, the fair value gap right here, and the previous high, become your new point B1 and B2. Now, point B2 has been completed, so this becomes your new point A, and you want to see a pullback, right? So this was your point A, then your point B1 was this order block that we had, and I hope that it is not too confusing. Like I said, really take notes, go back if I'm going too fast, right? Or if I'm not clear, if you're not really understanding this, I promise you it will come to you. You will understand it in a second. But this is your point A now, okay? These highs been taken out, so your point B becomes your point A, looking for a pullback. Best place to pull back to is this order block that we have. This is your B1. B2 could be this order block. B3, of course, could be a full continuation to the downside. Now, as we have seen, point B1 was the actual target that we had. Point B1 becomes point A. Previous high becomes the new point B, right? We see continuation up higher. Now, what is interesting is that we don't close above, or at least not bullish, meaning that it is a liquidity grab. Also indicating that this point A was not strong enough to push above it. So there are two types of respecting a high. The first one is closing below, where it is very obvious that you're respecting it. For example, right here, this low made a high. This low was obviously a lot higher than this previous low. It is respecting it. Okay. The second one is taking out liquidity, making it look like it is going to go up higher, and then moving down lower, because now you take out and buyers and sellers, right? What is happening now? Point B1 becomes the new point A. The previous point A now becomes the new point B1, because it is the first place where there is any type of liquidity to find, right? Second point B, very big fair value gap right here, combined with this OB, right? Third point B, still that previous low. We could even say this low and then putting a B4 down there, right? These are now the three targets that we have. We're now at point B1 in real time. We just want to see, okay, is this going to turn into a point A? And then we have a new point B up here. Now, let's get back to the lower time frames and zoom in on this. So this is what we talked about a few minutes ago. And now we know that the daily, before we have seen all of this mess on the right side, was actually bullish. So we want to keep ourselves in a buying bullish environment. So we know, okay, price switched bullish right here from those sells. So we want to look for buys again. But can you buy somewhere here? No. Reason is that you don't have a good place to put your stop loss underneath, and it would not be smart to buy at a high. Okay, so you want to see a pullback, and then you want to see a switch up again so that you have that buyer's alignment. Okay, price moves up higher, moves down lower. Now you want to look for the shift. So we had also internal market structure. Okay, I'm just marking out the highs and the lows that I see. As you can see, there basically only is a high that is relevant on the low time frame even all the way up here. Once you break that, again, no real good point to put your stop loss underneath. We could say that you could take a position like this. By the way, horrible on a Friday afternoon. But stops underneath this low right here, and you take a continuation, perhaps into this fair value gap that you have. This is even over. But again, we don't have really confirmed that we're short yet, right? So at best, this will be a break-even trade. But then it really gets interesting, because now this high right here also reacted like a respecting high, right? It was respected and not taken out. Meaning that this complete move right here, is now completely over, because price is failing to break above it, right? This is your point A. This is your point B, right? This previous high right here. And price is now unable to breach that point B. Maybe that's not been clear to you yet. But when you're looking at this also on a lower time frame, and you're just working with point A to point B, right? Point A, point B, it is just stalling right here, but let's say we could move up higher. Okay, fine. Let's look at it on a lower time frame, right? Price moves down lower, and this will be your target. Okay, this becomes your point A because it's the deepest point that is now creating that pullback. And we're looking for a price to take out this high with displacement, obviously, so that we can identify a new point A for a new pullback point. Okay, as you can see, price moves up, but it respects it, right? It takes it out, stagnates a bit, and moves down lower. Also, if we even would go on a 5 minutes, you would see price, bam, breaks this low right here. Okay, indicating that this point A was unable to break this point B, meaning it is a weak low. right? Weak lows get targeted, weak lows get taken out. That is exactly the immediate target that we have right here. So point A becomes your point B. This becomes your point A. Point B has been completed. Now point B becomes point A. Point B, pullback target. Because we are now in this bearish momentum, right? Pullback target, we have our OB right here. We have a big fair value gaps right here. B1, B2 up here. B1 was enough. You can see we have this reaction. Bam, point B becomes point A. Point A that was down here becomes point B. And this is now our target. This is like this yo-yo effect, right? Where you're constantly looking at, okay, what is point A right now? What is point B? Where are we trading from? Where are we trading towards to? And what is the trade that I want to take? That is what you're doing constantly, all right? Then you're combining this with a bigger picture on the higher time frames, on the lower time frames, and you're basically just smudging all of this into one bias. So now we can see that point B has been taken out. Also, body candle wise, right? Becomes your new point A. What is again a good pullback point? Small little OB right here. For value gap up here. Obviously, always keep in mind you always have a point B3 or B4 above the previous highs. But if you see reaction at these points, you want to already assume, okay, it is respecting and we're going. Go time, right? So point B has been achieved. This becomes your point A. This becomes your new point B. And now it is waiting for that pullback so that you have a new point A, right? Or a new place that you can see, okay, this is where we are going to move up from. Let's say we have a break like this, for example, then this will be your point A, and your first point B will probably be this order block combined with the fair value gap that you have right here. And I zoom out now in a second because I realized that we had this gap over Wednesday moving a lot lower, where we've basically completed a very big point B right here, right, from this point A. So this move is now done. We've also completed the very big move from point A to point B down here. And now this point B that we have is going to be turning into point A. We're going to see a pullback, right? This gap, this OB, maybe up here, okay? So whenever price now switch bullish, we know, okay, we can take a position up higher right here. So the most common mistake is that people, they use the lower time frame momentum to ignore the higher time frame direction, right? They see a 5 minute just bursting out of a fair value gap or whatever, and they just jump in. They follow that because they think, okay, it's breaking out or the momentum looks very strong, but short-term momentum, it does not equal the overall direction, right? This is literally engineered to make you go from left to right, bottom to top, trade from everywhere but nowhere at the same time. So now that you know the direction, the next step is knowing where to enter within that direction. And we will uncover that by going over the key levels. Alright, so the next one on our list is key levels, right? Find the right ones. I think that is probably as well one of the most important things that you will do regarding your strategy. And this is also one of the things that is probably the most difficult one to do for beginning traders out there, as they will see every key level as a key level, right? So the key levels, and this is basically the areas where price is most likely to react if you don't know what a key level is, all right? So to get a bit more in depth on that, what the key levels are, we can find them at support and resistance areas, supply and demand areas / order blocks, right? That is a bit of the same thing. Liquidity zones, so this could be above a previous high, below a previous low, fair value gaps, and then I have again previous highs and lows. So basically, to sum it up, these are areas and price where price could react from. And this is an example right here, right? You have this order block, price comes back to there, makes a shift in momentum, makes a shift in state of delivery, and it moves the other way. So something important to notice is that most traders lose because they trade in the middle of nowhere with no idea where the market is going. Again, point A to point B. So you want to determine your levels, right? You want to see, is this level a strong level or is it a weak level? So let's start off with the strong level. You will have clear reactions, multiple touches. The higher time frame, this level will play out on a daily or on a 4-hour, and you will have clean structure. So right here, for example, price dips lower into a 4-hour order block, and then it reacts from there very, very strongly, right? Breaking above this high, making a higher low and basically pushing very, very aggressively to the upside. Now, this is of course a textbook example as it is super aggressively coming out of this order block. But when you look at the weak levels, you will see random lines that you maybe drew on the charts. No clear reaction. This is lower time frame noise, so it's not based on a 4-hour or on a daily time frame. And it is just recently formed and it has not been tested before. So, for example, like this, some people will say, okay, this is an order block. And in theory, yeah, in some way, but the better one to look at is really when you look at this one, right? Price comes back here, reacts to this order block, and moves away from there very aggressively. So if you think about it, there's no real liquidity below this. Also, no real reason for price to come back here and then move, right? If you really think about it, again, point A to point B. This right here is point B. This right here is point A. So price moves to take point B out. We complete that. Then point B turns into the new point A. We create this pullback, right? Again, completed. Point B gets taken out once again. And then we start to move around, right? And then when you think about it, if this is point A all the way up here, where would point B be, right? It is a continuation to the downside. So this low right here is the lowest point that created this pullback. And as you can see, price takes it out, stagnates a little bit, takes this one out one more time, and then it starts to move up higher. So when we give it a score, again, 2 points, 1 point, or 0 points. So for the 2 points, we want to really see a strong level, right? It's a higher time frame level on the daily or on the 4-hour, or it is coming out of a higher time frame level. Okay, sometimes students ask me, okay, we reacted to this order block and now let's say we're 2 days later and we're moving up from there. Can I trade bullish one or do I need to wait for it to come back to an order block? I'm like, we're just coming out of an order block, right? You can now trade the trends. If anything, it is an even better trade than if you would have taken it 2 days before, right on the order block. Because now the reaction is clear and right now you can see, okay, there is really momentum coming out of there. Then you want to see that clear reaction. Again, that is why it is always better to take the trade 2 days after or then on the moment that price is in that order block. And you want to see clean structure. So you really want to see a shift and you really want to see momentum coming out of there, right? Very big displacement moves. Then if you're going to grade at 1 point, you're probably going to see some reaction. Not the best, not the biggest displacing moves, but you will see some movement, right? This is based on the middle time frame level or it is coming out of a middle time frame level. So this is when you have an order block on a 1 hour, on a 30 minute, right? Then you have 0 points. This is no level. It's the middle of a range. There is no clear structure and it is not coming out of a key level. Also, if your order block is based on a 5 minute, for example, it's also 0 points, okay? Unless you're scalping, of course, then it can be maybe a bit different for you. Now, how price behaves. At key levels, price does one of these 4 things, okay? It rejects, like right away, and it gives you a reversal. It breaks, and it gives you a continuation, indicating that this is the wrong key level that you're looking at. Fake outs can react, but still take it out before moving up higher. So that is actually what happens here. It reacts, moves up higher, takes it out, and then it moves, right? Or it can consolidate. Basically, a combination of both of them happens right here in this example, right? Takes it out, consolidates, fakes out, and then it moves. Now, this is a very, very important sentence. Your job is not to predict, it is to react and to follow the market. Okay, let that one sink in. If you learn anything from this video, let it be this sentence, right? Write this down. Put this on a notebook, put this into your journal, right? In a journal, have this open constantly. I don't know, put this on a paper. Make sure that you see this constantly. Write it on your whiteboard, on your walls. I don't care. Everywhere you can see it. Your job is not to predict, it is to react and follow the markets. This will save you a lot of money and a lot of mental breakdowns. Now, let's dive into the charts and let's see how we can identify these key levels. So, again, we're on the DXY. And we're going to go to the 4-hour because this will give you the most obvious key levels. So remember, key levels are above or below previous highs or lows. So this liquidity levels, fair value gaps or inverse fair value gaps, and order blocks. Basically, all of these points will be point Bs because all of these will be targets or potential point Bs turned into point As if you're trading from there. Right? So if we're just looking at this bit of price action, I would say pause the video right now and mark out for yourself where are all of the key points. So I'm starting all the way down the left right here in a second, and I will work my way all the way to the right here. I'm going to zoom out a little bit like this. Okay? Pause the video for a second and mark this out. Now, if you've done that, let's do it together, right? We are starting right here and we're ending right here. So the first key level is this order block right here. And what can we notice? This order block basically took liquidity before moving, right? Then it moved up higher with a very displacement move. So there were a lot of orders right here. Moved up higher. Is there something noticeable in this push up higher? Yes. This order block right here. Remember, we're marking out everything right now. By the way, this is how I mark out an order block. If price moves up, let's say there's an uptrend, then it moves down lower. This whole momentum that is moving down lower, including the wicks on this one, because I want to have the full range until it stops. So even though this is the wick of the bullish candle, it is the whole range that we want to account for. Doesn't really matter that much as it is most of the time reacting on the top of the range. But I want to look at the whole move because this whole move contains orders, right? And then we have the second push, basically. So again, order taking right here, second push. And then we see that price comes back to that area and reacts from there. So price moves up higher. Then we start to move down lower. Again, on this move right here, we can see two order blocks, okay? First one right here. And the second one right here. Again, two pushes right here that happened to the downside. Then, of course, you have the reaction to this OB. We move up higher. Again, order block right here. Right now, I'm only doing the order blocks, by the way, as these are the most extreme POIs that we have. In a second, I will also look at the fair value gaps. But what I see that most of the time, the order blocks really are king or previous highs and lows. So price moves down lower, moves up higher. There's no real order block right here. Moves down lower. There is an order block right here, right? It moves up higher and we can basically look at this range as it is the deepest point, the highest point. We look at it like this. Then we move up higher with an order block right here from the low to the top. I'm really going over it very quickly now. And then right here, yeah, probably if we make a move up higher, we have a bit of a retracement and then we push, we can look at that as an order block. So this is right now what we're looking at, okay? This is the deepest one, the middle one, the highest one. Let's analyze this first push first. So we see the price moves up higher and you have this pause in the middle, then again, a second push. So when price starts to reverse, you're gonna ask yourself, okay, we know that this is point A. What are my point Bs? My first point B is this low right here. And by the way, we can see now, for example, this is a nice fair value gap that we also reacted from, right? Not as strong, but maybe we can even see this one as point B1, point B2, right? And then we have all the way down there, point B3. In theory, we could say there's also point B4 underneath these lows, but remember what I said before, we want to see a continuation, so we're always assuming that price is going to respect this low. We're going to probably, in worst case scenario, react to this OB down here. So we can see price moves down lower, and remember, this is a 4-hour time frame. We're trading the 5 minutes. So maybe let's go to the 5 minutes, and let's see what kind of positions we could have taken. I'm not really going to look at the entries. As I said, that will be in the later stage in the course. But we want to see, okay, how would you trade something like this? So we know, the only things that we know right now is that point A is right here and point B1 is right here, okay? Point B2 and point B3, we know that they've been hit, but let's say we are just looking at this bit of price action right here, okay? So price is moving down lower, we can see that, and we can see that price failed to break the previous high, giving that this is now point A. Then we see price breaking structure right here, right? The structure that's from the previous point in the course or bias has shifted right here to a bearish momentum, right? So on a lower time frame, right, on a lower time frame, let's say this is your pullback, this is point A, and this is point B. Point B is now over as we have this shift, right? So this now turns into point A, this turns into point B. Now, on this example, we can ignore this first point B and immediately target B1 because this is now very close to hitting B1. And actually, if you think about it, if we shift momentum right here, we break down lower, the obvious thing is that we're now shifting into a bearish momentum, going to target this low down here. So your entry will be on the break, your stops will be above the high, your target will be point B1, and this is your position, right? Very calculated position, and I've not looked at entries yet, right? I'm just looking at bias plus a key level, okay? Now, point B1 has been completed, so what happens? Point B1 turns into point A. Let's see. Okay, price respects the previous low. What does this teach us? This teaches us that price is going to be turning around. When does price change in state of delivery right here? It does when we break this high, okay? So we want to see this high right here being broken. It did not break, so we are still continuing our trend down lower and we're still waiting for a new point A to be formed. Maybe we can go to point B2 in one go. I actually forgot how this move was going before we did the replay tool. Now, what is more interesting is that for us to change our bias, we have to break this high right here, okay? So now we have to break this high. Once we do, we know that this is now point A, okay? That is why we're waiting for that. And there we go. We break this high. It is now still stagnating around it. We really want to go it above, like this. And now we want to take a position up higher. This is now in the middle of the night during Asia session, so we're not going to take it right here. When to take a position is also inside of this call, so it will come back in a later stage. But, as you can see, this is already a very nice push to the upside. Price also moves down lower. Again, respects this low right here. Now moves down lower from here as well. We're now ready to approach B2. Patience, a very, very important skill to have when you're a trader. So price takes out this low, consolidating around it. We wanted to see break this high right now for us to shift and get that counter trend in. If you're, by the way, a swing trader, you can also choose to hold your position until price breaks a high and shifts around, right? You can also do that. But as with day trading and as most prop firms don't really allow it, I rather take these smaller trades and really wait for a new confirmation to make the shift. Okay, now we have made the shift. We reacted from B2. We took out this liquidity right here that we had. We took out these highs, creating the new shift. So this now becomes point A. Now we're going to think about, okay, what is our point B? If we're looking at it, right? Basically, we're going to look at what are some of the positions where we can trade towards to. This is the only one that we have, right? For value gaps right here. On a 4 hour, that is a very big up move, right? Very big up move, and even probably even this high can be considered as well, okay? And actually the body candle on the, let's say the hourly, something like this. This can be your new point B. So what do you do then? You go in the 5 minutes and you wait for a break up higher. So then we're going to take our position. Take a position, stops underneath these lows because they cover it. Target is right here. You can wait for price to break these highs, right, to go above it. You can look for a better entry, maybe this order block on a very small time frame. Let's just do that for educational sake, that you can see, okay, to improve your entry, you can use fair value gaps, inverse fair value gaps, order blocks. Again, we will come back to that in a second. But this is a very nice example right here of, again, a very beautiful trade, right? Price moves down lower into the deepest value gap that you have, and then we move away from there. So this is literally a masterclass on key levels, point A to point B. Now your point B becomes your point A, right? And your point A right here that we have becomes your new point B. Again, you will target B2 or, like I said before, like we did right here as well, you will target B3. Now, there's also another scenario. Other scenario is that we will continue up higher. Don't forget that we're actually bullish, right? That is what we now have to find out. When is this going to be a point A? Because if price moves up higher, then point A can also be when we break these highs, okay? We're overnight again. We are dipping down lower already. And this is now good because we're consolidating. We are actually respecting this high that we have right here. And it looks like we are already dipping down lower. There we go. We dip down lower and we are now shifting momentum. This is now point A. This is point B. How can you take your position? Like this. When we break down lower, it stops above these highs. You target point B. You can target this one, or you can target point B3, of course. Because, you know, if it is not this key level that is going to bring us above, it's probably going to be the next one, right? Then this will be your position. And there we go. We're dipping down lower bit by bit, right? And right here, take profit has been hit. Dip down lower right there. But now this is also a good example, right? We've taken out point B right here, and we see that we start to reverse, right? So we can say, okay, point B turns into point A, right? Then we can ask ourselves, okay, what is a good place for price to reverse towards to? Let's check on the hourly. The hourly, the only real valid place that I see is this fair value gap right here. So let's see if price comes there. Okay, we get even higher and then we dip down lower afterwards. We had this fair value gap and we had this OB. Literally the only two, right? We respected this one and we dipped down lower, hitting TP after all. This is how you use key levels. This is how you use thinking about trading from point A to point B. I would say it's an absolute masterclass. Now, obviously, we're doing this literally in replay mode, and we've both seen price action before we went into replay mode. The point of this exercise is not that we have it right or wrong. It is really how you read the markets and really learn to think about trading from point A to B, B1, B2, B3, B4. Okay? Because like you see, literally every trade that we have taken is super logical. So that was basically key levels, right? After key levels, we will have liquidity, we will have entry confirmation. Like I said, this one is a big one as well. I think it is super, super important. Risk structure as well. And then the grading exercise, yeah, you can't really miss that. But we will also go into the trade journal, into the backtesting, how to set up your first account. Again, psychology, your past, your routines, a map system that I have created, the biggest mistakes that traders make. So make sure you keep on watching because it is from the highest importance that you get every single stage. So basically what makes the most money and brings everything together and will literally change your trading forever is confluence linking, okay? Your bias plus your level plus a confirmation is high probability. One without the other will be a lot weaker. So for example right here, price comes up to this order block, it creates a failed high, it creates a market structure shift, your bias is bearish, and this is your trade, right? Beautiful trade, literally textbook. Versus, price comes up higher, creates a market structure shift right here, you think. Price moves down lower right here, but you fail this, you think that this is the order block. And also it is this example, by the way, so you're also trading against the trends. And now you lost, right? And you have no clue at all what happened. So, now that you know where to trade, we will cover liquidity in the markets next. I hope you enjoyed that module. Make sure you're taking notes in the meantime. Go back if you didn't understand something, write down what I'm saying, and really try to understand the lessons. Now, we already went over our bias and our key levels, but what is coming next is a real game changer. It is liquidity. And after that, we will go over entry confirmation, a risk structure, and I've also included an exercise for you so that you know 100% certain that you understand everything that I'm saying. But don't forget, I also teach you how to journal, how to backtest, and how to work out your trading psychology, including an almost 40-minute call with a trading psychologist. Make sure you don't miss a thing, keep focused, keep taking notes, and let's get into the next one. Alright, now we have come to liquidity. Know where the price is going. That is a very important thing to understand, and if you understand liquidity, you know where price is most likely to go to. So you have to ask yourself, where is price going before you enter, right? It does not have to be before you enter, just in general you need to know where is price going, because knowing where price is going is also a very good way to determine your point B. Now, if you know, let's say for example at your point A there's a very obvious liquidity point, then you know, okay, I perhaps need to wait a little bit longer before I enter. So what liquidity is? This is where orders are stacked in the market. So we have above highs. This is your buy side liquidity, right? This is the green line that we have right here. Or we have below lows, and it's your sell side liquidity, this red line that we have right here. Now, to see this in a bit of a chart setup, we have this one right here. You have buy side liquidity above these highs, sell side liquidity below these lows. And as you can see, price steps it out, moves to sell side liquidity, and then moves up higher. So price moves to take out liquidity and not randomly, right? If it looks obvious, it usually is liquidity. So when price takes out this low, for example, you see that it starts to stagnate and it starts to turn around, meaning that this was a very obvious point B target that is now completed, and now we start to move up higher again. Right here as well, right? Price took out liquidity and then moved away down lower. Like I said in one of the previous chapters as well, most of the time I look at body candle closes. But as you see on the body candle close, we did not react. We did have this move down lower right here. This was why we've taken out body candle close from this high, with a reaction down lower, but still it wasn't enough. So then this can become a new target. And as you can see, this was the right point to take out liquidity to make the move down lower. Again, direction, point A to point B. Before entering a trade, you should know where price is likely going. If you're buying, where is price going? Above highs. If you're selling, where is price going? Below lows, right? So let's say this is your point A. This means that you are selling from this point on. This can be your first point B. Actually, filling up this fair value gap should be your first point B. Then you have your point B1 right here, and then you have your point B2 below these lows, right? Same thing here. Point B2 turns into point A. Then you're going to ask yourself, okay, what are my point Bs for this pullback? Point B1, point B2, point B3, this OB, and point B4 above these highs. As you can see at point B1, we already had a reaction lower inside of this fair value gap, and then we moved away again. Now, how do we score this? So, we give 2 points to a clear liquidity target. It is above obvious highs or below obvious lows. It gives clean structure, it has a logical destination, and price recently took out a target, right? If these 4 things happen, then we give it 2 points. Now, 1 point for a decent target, there is some liquidity present, but for example, we did not take out a target recently. It is less clear / less clean, then we give it 1 point. We give it 0 points if price in the middle, no liquidity being taken out, and there is no clear destination marked out for us. So an example of a good trade would be something like this, right? There's an entry after a recent liquidity grab, point A. Entry after confirmation, right? You break down lower right here. And there's a clear target, point B. A medium trade would be the position was not taken from the right liquidity point, right? You did not wait for the right point A. There was perhaps no confirmation, but there was a clear target, right? Point B. And a bad trade was no recent liquidity taken, no entry confirmation, and no clear target. And as you see, the entry confirmation and the liquidity go hand in hand very, very well, as you want to have that confirmation that it was a liquidity grab and that the liquidity grab is over. That is why you're waiting for an entry confirmation. Now, let's dive into the charts and see some real-life examples of liquidity grabs and targeting liquidity. So, this is a chart of Euro USD. What I'm going to do is I'm going to mark out all of the times the price took out liquidity and turned around very aggressively. If we're just looking at this bit of price action right here, we can see it happen very, very often, right? Let's start on the left. This is, by the way, the 15-minute chart. This happens on every single chart that you're looking at on every single time frame. But the 15-minute is, I think, a very good bread and butter to use to also give these liquidity examples to you guys. So price sets a high right here. And again, to determine liquidity targets, you need to know your market structure. That is very, very important. And you need to have that mindset of trading from point A to point B. So price makes this pullback right here. So logically, this is our first buy side liquidity and this is our first sell side liquidity, right? Price moves up higher, makes a pullback, and then we start to move, okay? This is now, again, also a very nice example of that price right here, move down lower. And as you can see, we respect the low, right? We respect the low and we start to create higher highs and higher lows. Very obvious move, right? So again, with only using your bias, you could have had a very nice trade out of here. Now, what we also know is that this now becomes point A, right? As soon as we start to flip right here. Becomes point A, and this becomes your point B because you're looking for a continuation up higher. Why do we always say there is a point B above every previous high or below every previous low? Because these are the most likely points for liquidity to be above or below. So point B, point B has been reached and we see a complete pullback right here. Can be a lot of reasons why this happened, right? Profit taking, maybe some new sell orders in the market. There can be a lot of reasons for that. Now what we see this pullback. Point B becomes point A, obviously. And then you start to ask yourself, okay, what could be a point B inside of this range? Of course, this is on a lower time frame, but still we can determine those point Bs. The first one that we have is this already gap combined with this order block. I'm gonna mark that out for you guys so that it is clear. Like this, you can even make it a bit bigger like this, but let's just mark it out like this, as we also see it's reacted on this zone. This can be point B. Second point B can be down here. I'm just gonna mark it out like this. Second point B can be down here, and the third point B can be below this low, below sell side liquidity. Now, as we are in a very bullish structure, as you can see, we know that it is very unlikely for this point B to be taken out, as this right now is now the lowest low that broke the previous high. And we know that this now is a strong low. Now, price makes this pullback, creates this point B turns into point A, the previous point A turns into the new point B. We want to see that continuation up higher, and we do, right? Price takes out liquidity from this high, and it turns around right here. Start to move down lower, and we take out this low. Again, remember, a couple of things that can happen at lows, a couple of things that can happen at liquidity points where price breaks through it, price reverses, price consolidates, or price gives a liquidity grab, right? And that last one is the one that we have right here, right now. Price makes a liquidity grab and turns around completely. Again, indicating that this move down is over, point B turns into point A, and we have only a point B above these highs. That is how you look for liquidity points. Now, let's say, for example, you already are at a point A. So, for example, right here, and you see, okay, price moving down lower. We stop moving down lower right here, but at this moment, we are already moving up higher. But as you see, we are moving higher, but then we start to consolidate, and we start to create lower lows and lower highs again, indicating that this low right here that we made was not strong enough. A weak low gets raided, and this becomes now a liquidity target, right? Price takes this out. Now we're going to look for the same thing. Is this low now strong enough to take out the previous high? So let's mark out that structure that we have right here. As you can see, this low is strong enough to break out of the previous highs, right? These are now the previous highs that we're looking at. Then we take those highs out. You have your liquidity grab right here, right? Price takes it out, moves down lower. As you see, it stops at a fair value gap, could be a point B. Then it moves up higher again, fails to break out higher. So indicating this low is a weak low, right? I hope you guys are still with me. Then price moves down lower to seek to a new point B. So this was point B. This is on a lower time frame, by the way. Point B. Let's make it easier and let's call this B1. Also make this a lot smaller. This is B1. Then B2 is all the way down here. Order block. And then we have B3 inside of this order block / fair value gap, and B4 underneath these lows. Okay. As you can see, price reacts on B2 as well, moves up higher, breaks structure. Right here, we didn't even break structure. Breaks structure, right? Right here, there was no real structure to break on the 15. And as you can see, once we were about to break structure, we already turned it around completely. At this moment in time, we did break structure and we completely bursted through it, right? And these moments in time, guys, are the times that you make a lot of money. What I often see happening is that traders, they don't really react to what the market is doing. They just put their ego on the line and they want to be right. So let's say, for example, you trade this position, right? You think, okay, price is going to reverse from here and it's going to continue up higher. Sure thing, that can be. But once that price turns around right here, you should already know, okay, I need to get out of the position because we are unable to break this high. Then, when price comes down here to B2 and it breaks out, don't be afraid to take another position just because you lost this one or you got out of break even, because now you know, okay, now we are ready to move, right? Let's say you get out of break even as well right here. Don't be afraid to take another one right here if you see the right setup. But it is very important that you wait for price to show you what it is about to do, right? Right here, it clearly showed you what it was about to do. It broke out of this zone, it retested and it moved, right? And see what happens after. A very, very big explosive move to the upside. Now, what I also see happening very often is that people trade this, right? They see price turning around and they think it is going to give a very big knee-jerk reaction and it moves up in one go. Could be, but we need to break some highs on the left in order to see if that would be a reality. There are no highs to be broken right here. Yeah, even if we would say this small little thing right here, right? The small little high right here to be broken, fine, it is broken, but then again, okay, point B has been completed, turns into point A. We have to see a reaction from this OB or this low. As you see, the reaction from this OB is not able to break the previous highs, meaning that it is a weak low. I'm going to mark that out for you very quickly so that you are with me. Let's say this was your point A, this was your point B, moving up higher. Looking at this, right? Let's say this was your point A, this was your point B. Point B has been completed, so point B turns into point A. Once price turns around, that is right here. Then we need a new point B. New point B can be right here. That's your first one. There is no other one in between, maybe this fair value gap. And the second one is all the way below these lows, right? This OB slash these lows. Let's call this B2 to make it easy. Now, as you can see, price comes down lower to B1, reacts, moves up higher, but is unable to really break above these highs. As you can see, it starts to consolidate as soon as we are above these highs, indicating that this low is a weak low, right? And that this will be hunted. Now, price moves down lower to go to B2. And as you can see, takes out B2. Then it does move up aggressively, takes out these highs, and now we are in the running, okay? I hope you guys are with me on that. Now, a lot of people always ask me, how do I read the right liquidity point? How do I know which ones are the right ones? You have to pay a lot of attention, okay? You have to mark out your market structure. You have to pay attention to market structure and just see what highs and lows are doing to each other. Are they respecting it? Are they breaking it? Are they consolidating and perhaps giving that liquidity grab, right? We do not have insights on where all of the orders are. Yes, you can trade volume, you can look in the order books, but still it will not show you where all of the liquidity points are. So you just have to see what does price do when we are coming near previous highs or previous lows. For example, right here, it is clear as day, and this is a New York setup, right? It is clear as day that we're bearish. Why the hell would you buy? Yes, we are very close to this low. It could be a potential higher low that is being formed. But then again, you need to wait for a shift, right? The only shift that happens is when you break this high. Again, we could argue that you have a little movement when we are above this one. It will be a bit of an aggressive move as it is a very small high. But let's say you don't do that and you wait for this one to be broken. You see price moves up here. It doesn't close. It rejects and it moves down lower very aggressively, giving you the perfect selling opportunity. Okay, and you just target point B right here. And then you have to zoom out. You have to zoom out on a higher time frame and you have to see, okay, what could be the next target then? If this one is not the target, what could be the target? What is your point B? Ladies and gentlemen, that is point B. What do we see? Price turns around completely when we take it out. Really, it is not that difficult. You just have to pay a lot of attention and you need to know what you're looking for. And I hope that after this course that you have the complete insight that you need in order to trade this. Now still, we all make mistakes, right? It's not that you now know everything and that you're never going to lose a trade again. But because if, let's say, for example, we look at this zone, you see price takes it out, moves away, creates a higher low and then moves away. Still, I was going to give an example that you would lose, but this now is a textbook example. But sometimes you can misread the markets and you can be in a little bit too quickly, for example. That is what I was going to say. And then you still lose the position. But you have to make sure that you know what you're doing and that you're really following a strategy like this that does make sense, right? So that you're losing as less as possible and your edge is as strong as possible. Now, most traders, they enter trades without knowing where price is going, right? They rely on feeling. They see a couple of candles, they see a bit of momentum and they think, okay, this one is going, I'm getting in. And they really hope that price moves. And they also exit randomly, right? That is not trading. That is guessing and that is gambling. We don't want to do that because once we're gambling, we completely lose our edge. Now, the most common mistake is entering at the wrong liquidity target or targeting the wrong liquidity target. If there is no clear liquidity target, there is no trade. So again, if you cannot determine your point B, or if you are not coming from a clear point A, so you had liquidity taken out, price moved and made a market structure shift, then there is no position to be taken. Now, your bias gives direction, your key levels give location, and liquidity now gives the first confirmation and the destination that you want to trade towards to. So now that you know those three things, we will cover how to actually time your entry next. All right, it is time for a very big module. This is entry confirmation. And I'm not constantly calling this big because it is a lot of lecture and a lot of information in here. I think it is somewhat the same as the other ones, but this one is super important as this is a module, this is a phase that a lot of people skip or that they do not practice on a daily basis and they do not execute correctly on a daily basis. So, entry confirmation, right? Don't predict a move, wait for it to start. This is literally the death of every beginning trader, is ignoring this constantly, right? They choose this path instead of waiting for this one to form. Now, what real confirmation is? Confirmation is proof that the market is actually moving in your direction, right? This can be displacement, a strong move, a market structure shift, or an inverse fair value gap, a reaction from an inverse fair value gap, or from a fair value gap, right? But most of the time, you want to see displacement and you want to see a market structure shift. Then inverse fair value gap or fair value gap, these are just to perfect your entry, right? Now, what it is not a setup that looks good, right? That is not confirmation. Or it is at a level, bias is aligned, it should move from here. That is anticipation and not confirmation. These are the things that you most often tell yourself when you're trying to justify your entry. We are not looking to justify anything or to anticipate anything. We want to have confirmation and we want to be as sure as possible before we put our money on the line. The market will show its hand before you enter. Let's say you need to have a market structure shift right here. You have the displacement right here. Then you're not entering inside of this mess, you're entering only after that green line occurred, right? After that market structure shift, after that displacement. Displacement, market structure shift, and the inverse fair value gap. 3 examples right here. This is displacement. This is displacement. These little messy candles are not displacement, okay? If you see price move above here with just a little candle, it is not displacement. This right here moving above this high, this is displacement, okay? Not just small candles or small wicks above previous highs. This is a very good example actually of displacement, okay? You see there is just something happened, right? 2 candles took out, well, probably like 30 candles from before. That is a displacement move. Now, market structure shift. 2 important things. This is what it's not, right? When price just is, even if it closes above, you see? It is not really closing above, like it is not displacing above it. It is just messing around above that previous high, okay? For a market structure shift, by the way, I always look at wicks, not body candles like before. Always at wicks, because now I do want to see a close above the whole range of the previous price action. Then, what it is, you can see price moving above, displacing above, creating a market structure shift right here, right? Very, very obvious difference. Now, an inverse fair value gap, for the people that don't know what it is basically fair value gap, third inverse when we trade it through it, right? And what we often see is that price then comes back to it, especially when it is combined with a new fair value gap, uses it as support and then it moves away from there. Now, to score your entry, 2 points for a strong confirmation. You have clear displacement, clean structure break, and a strong intent from the market. It is like super obvious where we're moving, right? Super obvious break. You don't have to ask yourself or ask the guys in the Discord, yo, was this a break? No, you can literally see that it was a break. That is how obvious it should be. 1 point is a weak confirmation, right? Small move, unclear shift, hesitation. And then at 0 points, there's literally no confirmation at all. No break, no displacement, just a setup sitting there in the middle of nowhere, okay? This brings us to no confirmation equals no entry. Okay, I don't want to see a 0 on entry confirmation ever, right? Even if it is an 8 out of 10, if it is a 0 on entry confirmation, I'm not taking the position. This is how important this one is, okay? You can even weigh this one heavier than a 2 out of 10, okay? So a good trade. Again, the examples that we used before, you want to have an entry after a market structure shift candle close, right? The market structure shift itself needs to be a candle close, obviously. Price needs to displace, so very big candle to the downside, right? Right here we can see price moves down lower. At this point in time, we don't have a real market structure shift because, as you know, we need to break a low from this move. I think I use this low right here to be broken, as you can see, with this displacement move to the downside. But still, it is not the best example. This right here is a very clean example, right? You see price moves down lower, high, low, and breaks above right here, right? This will be a much cleaner example of a market structure shift. And of course, all the other elements are aligned, right? You cannot take this without having the other things aligned. Then a mid-trade would be price is maybe displacing, but there is no market structure shift, right? Only a break of structure, and it's not aligned with any other elements. You're taking a short position, while clearly long right here, moving towards this previous target. Yeah, you might have some displacement to the downside, but not really, right? So it is just a very mid trade. Then a bad trade, again, not looking at anything, right? No market structure shift, no displacement, and not aligned with any other elements. Getting a 0, by the way, on this one is going to be very hard. So really, if you get a 0 on entry confirmation, you know it is a bad trade and you need to get out as soon as possible. Now, the issue why traders don't wait, right? Because this is very often the reason that you get a 0 or a 1 is that you're impatient. So traders have FOMO, right? Fear of missing the move, wanting the perfect entry, impatience. So they enter early and pay for it, right? Most traders don't wait for confirmation. You don't need the best entry, okay? You just need confirmation. That is the most important thing to remember. Now, let's see what this looks like in practice. Let's open the charts. So we're back on Euro USD again, and now we're purely going to look for entries. So I'm on the 5 minute and I'm just going to look at these point B's that are turning into point A's. And I'm going to show you what I want to see for price to turn around, okay? So right here, this is a previous point B that can potentially turn into a point A. We have a market structure shift down here, right? We also have a displacement move through it. You can see 2 big candles moving through it. Why do we not have a market structure shift down here or down here? Like I said before, we want to see a displacement move through it, not just some wicks, not just messing around price action. This then can be your entry. If you wait for the candle close, you put your stops above the previous high that you have, and you take price to your first point B. Now in this case, I did not mark it out, but let's say your first point B is this very big fair value gap that we have, right? Okay, so that's your position. Then price comes down lower, starts turning around again, and this one now turns into your new point A. We want to see a bit of a shift. The only shift that we have is right here. So price moves above it. Once we do, you can take your entry, stops underneath the lows. You target the previous high up here, and this is now your trade. By the way, I always target body candles, or at least on a higher time frame, purely because I don't want to get stopped out by these liquidity takings. So this is now your trade, right? Point B turns into point A. There is a shift right here, because this is now a low that has been taken out on the 5, and I'm only taking a London session or New York session. This is New York afternoon, and this is right before New York, right? These entries. Now price moves down lower. This is also New York afternoon, but it is getting a bit late. Could have taken your position like this. Why? Because this is really the displacement move to the downside. Your stop needs to be above this high, and your first point B is already here, so it is not really worth it, right? You wait for price to move down lower, and then you wait for the shift, right? Shift happens, right? Is this one? Yeah, this one, right here. Price moves above. Now, this is an interesting scenario, as this would be a massive stop loss, right? So are you looking for a pullback? Pullback into your fair value gap. You have a fair value gap right here, very big fair value gap right here, as you can see. This makes your trade already a lot better. Still, would it take this with a 21 point stop loss? Probably not. I would probably put my entry here or maybe even here, right? To be completely honest with you. Now for your target, this would be your target. So in my case, the trade wouldn't make sense. I don't trade 1/1s. If price would have come back to here, it would have made sense. But in this case, it wasn't. Price moves up higher. Again, shifts right here. Again, price moves down lower right here. This is a Friday, New York afternoon, not the best, right? To be completely safe, your stop needs to be here. If you're a bit more aggressive, you can place your stop right here. You're targeting this low. So this will be your position, or like I said, like this. And I see we have taken a long instead of a short. So this will be your position. Stops underneath these lows. This or this. In this case, you would have been stopped out. In this case, you wouldn't have. Price moves down lower on the opening of the new week. That's fine. Price takes out this position. Again, point B turns into point A. So you're waiting for a shift. You have a small shift right here, right? This is in the middle of the night, Asia session. This now New York. And if you had your shift during Asia, you really want to wait for the opening from New York to show you something, right? Show you in a liquidity grab or a continuation, some type of a pattern, right? And also a good place for you to place your stop loss underneath. Price moves down here right before London open. Then we move up higher. This is London open right here. Once you create that continuation, you can put your entry right there. Stops underneath this low. And again, you target this previous point B right here. Okay? Continuation up higher. Take the position. Point B turns into point A, so you wait for confirmation that we're going lower. As you can see, it doesn't happen. Doesn't happen right here either. Right here it happens. Okay? This is the low that we're looking at. This is the position that we're taking. Again, New York afternoon. It's a bit of a pattern right here, guys, right? This is your entry. Then you're looking on a high time frame. Okay, what is my point B? My first point B. It's this OB right here, right? Small OB right here. It's my first point B. As you can see, it is only a 1 over 1.2, so it's not really worth the risk, at least not from me. So, or we need a better entry, or we need a better exit, right? Better exit would be guessing that we're not going to react from this one, and we're going to go to the second point B, which could be this high right here, right? This high or this combined with this fair value gap. That you could do that, or you can make sure your entry is a lot better and you have a higher entry like that. But as you can see, we're still in that moment in time now. So what do I think? Two things. It can react from point B right here as soon as we're coming down there, or we can go to point B2 somewhere down there. But that we're short is definitely for sure right now. And as you can see, we have not turned bullish yet. So we're still waiting if it comes to that. And see, guys, if you know point A, if you know point B, you know the direction, you know the bias, you are looking at the right POIs to take your positions, then it is just waiting. It is just waiting for price to break out of these previous highs or lows that you've marked out, and then you take your position. Let's say, for example, right here, we're clearly bullish, right? We're clearly bullish. We're moving down lower. Okay, this is on the 10-minute, by the way. I'm going to the 5 because the other ones were also on the 5. So this is on the 5-minute, right? We're clearly bullish, and right here we were moving down lower. All right. So in theory, our shift is when we break this high. You can take this position, right? You can completely take it, or you can wait for price to break these highs. Even if you would do that, because this is a displacement move up here, there's no place for your stop loss. It's just a very big displacement move. So what do? You wait. You wait for a better entry. You can put a limit order, or you can legitimately wait, right? Where's the place you need to put your stop loss underneath? This low down here, right? Or this low even, if you're a bit more aggressive. I'm not going to take a 42 pip stop loss. I want to take a 10 pip stop loss trade. So if it is a 10 pip stop loss trade, this is my entry, right? Now, this is, of course, the best entry in the universe. But see how your thinking process needs to be. Okay, we break out here, so we're obviously bullish, but my stop needs to be in a very good place, something like this. Okay, I want to risk max 10 pips or let's say 20 pips, so I need to do this. Right? I need to wait for price to come back. Let's say it moves up a lot more, right? You still wait for price to pull back to somewhere. Because then if it does, and let's say you don't have a clear place to put your stop loss underneath anymore because we've moved so aggressive to the upside, you wait for that pullback and then for that break, right? Pullback right here, break right here. So as soon as you break this point, you can enter and you can put your stop loss underneath one of these, right? This low, or this low. See how that makes sense, guys? How waiting for confirmation is so much better than trying to predict what the market is going to do. Now, the most common mistake is that you're guessing the move instead of confirming it. I see it every single day. People are super impatient, right? Because a lot of you know what you need to look for, but still you don't, right? Because you're impatient. And you think it's at my level or somewhat at my level and I'll just enter, right? Because I cannot wait for the confirmation or I don't want to miss it. All right, stop doing this, stop justifying it, and stop saying this to yourself. So, bias gives you direction, levels give you the location, the liquidity gives you a target plus your first confirmation, and your entry confirmation gives you the timing plus your second confirmation. If the market hasn't confirmed, you don't enter, period. All right? So now that you know when to enter, next we will cover how to manage risk, so one trade will never ruin you. Now, the next module is risk structure. As you can see, risk to reward is key. So, risk structure. Every trade must make sense before you enter. The three elements of a good risk structure, the three elements that you need to have before entering every trade, are having a logical stop loss, having a clear target, and having a minimum risk to reward in place. So let's start with the first one, a logical stop loss. As you see that I already wrote down, a bad stop equals a bad trade. Your stop is not where you are comfortable losing, it is where your trade ID is invalidated. Alright? So it is good that you're placing a stop loss based on, let's say you only want to risk $1,000 or $500. That is very, very good to begin with. But you need to think about, why do we use the stop loss? We place it at a place where price would invalidate our trade ID. So for example, if we're in a bullish structure, there would need to be created a bearish market structure shift. For buys, below structure. For sells, above structure. And this is based on logic and not emotion. So for example, right here, you take a long position. By the way, don't pay attention to how this one is formed, because it has absolutely nothing to do with what we've seen so far. But that is about the stop loss right now, right? If price would dip below this low, we would see a continuation down lower instead of a reversal, meaning that our trade ID of this reversal right here would be invalidated. For a selling position, price moves down lower. We don't want to see it move up higher and break this high. So stops above this high and we target down lower, right? You have to see it as this is your point A, and point A can never be broken because then your trade is wrong. You always want to see it go towards point B. Now, clear targets. You don't base your targets on the dollar amount that you need to make. Again, leave those dollars out of your mind as much as possible, because this will ruin you. You will drag trades, you will close trades too early, and you're basically not giving your trade a fair chance to prove itself, right? Or to play out how it is supposed to play out, meaning that your edge will also get affected by this. So, your target is not what you hope for. It is where price is likely going. Based on liquidity, highs and lows, based on structure, and it must be realistic. This is basically, in a nutshell, how to determine your point B. Alright? No clear target is no reason to take the trade. So for example right here, we take this position down lower, we have a clear target, below this low, because we want to see a continuation of this bearish bias to the downside, okay? Right here, clear target. We have this high. We want to see continuation of this, let's say it was a bullish position. Then a minimum risk to reward. A good setup with a bad risk to reward is still a bad trade. Now, what is a bad risk to reward? Is it 1/1, for example? I don't think so. I think a 1/1 is pretty alright. But if you're risking $1,000 to make 500, I'm not a fan of that, alright? So every trade must meet a minimum risk to reward. 1/1 minimum, better is 1/2 minimum, and I personally like 1/3. I also noted down there are lots of traders that trade a 1/1, right? But a 1/2 or 1/3 system just gives a lot more room. With a 1/1, typically your win rate will be higher, but you also need to win more trades than you lose in order to be profitable. With a 1/2, you can lose 2 trades in a row and win it all back with 1, and in 1/3 you can even lose 3 trades in a row and win it all back with 1, right? So it gives you a lot more room for error. Now, also make sure you don't overdo it. Usually the higher risk to reward, the lower your win rate will be. So some traders will aim for a 1/10 or a 1/5 or a 1/8. There's nothing wrong with doing this sometimes, right? Everyone can have a home run trade once in a while. But let's say this is your standard, then you also have to be okay with having a 10% or a 15 or a 20% win rate. And I know that most of you, especially not beginning traders, are not okay with losing 7, 8 trades in a row. Now, let's say your position, like I said before in the previous segment as well, if your risk to reward is below the minimum, see if you can get a better entry. If not, the trade is invalid and it doesn't matter how good it looks, all right? You're not taking it at that point because it is just not worth the risk. So, how to score this? 2 points is a clean risk structure. There's a logical stop, a clear target, and it meets the risk to reward requirements. 1 point is a decent structure, slightly unclear, or a bad stop or target, and it barely meets the risk to reward. So these are the 1/1s. And 0 points is no structure and an invalid trade, right? No clear stop, no clear target, and a poor risk to reward. Again, no structure is no entry. Alright, so an example of a good trade. Clear stop loss, below the structure. Clear take profit, nice point B. And a good risk to reward, 1/3, right? Or 1/2.5. Then a bad trade, okay stop loss, right? We could say yes, that's fine. A very poor risk to reward, because it is just a 1/1. But you still have a clear take profit. Right? But because it is a very poor risk to reward, as you can see, it's not even a 1/1. Plus, you're trading in the wrong direction. Does not have anything to do with your risk structure, but still, it doesn't help with your risk to reward. It is a bad trade. Risk to reward is very, very important. And again, I will show you some examples on what a good risk to reward looks like. So these positions that we have taken before, right? You can see they all have good risk to rewards. Price enters right here, stops underneath the low, and we target the previous high. Right here, entry right here, stops above the high that would invalidate the trade. As you can see, this high would not invalidate the trade. Target underneath this low, and this is your trade. Right here, stop underneath this low, entry right here, target above these highs. Continuation. Right here, stop underneath the low, target, continuation. And this is an interesting example right here because even if price would do this, your trade ID would still not be invalid, but the place where you're buying is wrong. So a part of your trade ID is invalid. So then you need to wait for a better place of entry. Right here, same thing. Right? The price could go up here and then it moves down lower. Your entry was just not right then. This one as well. Entry right here, stop. Can definitely be here. But what you also need to think about, most of the time, if we move up here, it is very likely that we're going to break this high as well. But always be rather safe than sorry and put your stop above the most logical high or below the most logical low. Now, this is a very big one because most traders, they decide risk based on money and not logic. All right. And that is not risk management, that is emotional management, because you're not willing to risk more money or you're not willing to lose more money. And that's why you're basing your stop on that. So I'll risk 1%, but there is actually no proper stop, or move stop when uncomfortable, right? Moving it up higher or moving it down lower even is even worse, right? Or you close early when you're scared. So the most common mistake then as well is placing stops based only on how much you're willing to lose, instead of where the trade is invalidated, all right? The result is getting stopped out too early or holding losing trades too long. Maybe you put your stop loss way too deep, right? Could also be. So if the trade doesn't make sense on paper, don't take it in the market, right? If you're risking 1,000 to make 250 bucks, it doesn't make sense to trade it. So the bias gives you direction, the levels gives you location, liquidity gives you the target plus the confirmation, your entry confirmation gives you timing plus your second confirmation, risk gives you protection. And these are not the only things that we're discussing today, guys. Like I said before, we will also go over your trading journal, how to backtest, to open your first account. You will see some students that are doing massive payouts. You will see the Profirm cheat code. We will dive deep into trading psychology, see what a huge module this is. I'll go over the passive trade, the daily routine, the map system, scaling after a payout. I literally am going to cover everything inside of this video. Like I said at the beginning as well, it is very important that you take notes, that you're serious about this and that you're giving it your full attention. Now that you understand all the 5 criteria, we will go over some live examples to make you understand the curriculum completely. Let's put it to the test. Now we are coming to the grading exercise. This is a practical part of the course. Again, give it your full attention. Again, do the things that I ask you to do while in this module, because this way you will benefit the most out of it. So, the grading exercise. This is where you will test yourself. All right? So, the instructions. Don't just watch this. It's an interactive part of the course. Pause before every example. Score the trade yourself, 0 out of 10. Then compare with the correct score. People who do this are the ones who improve. All right? You can do this on a separate tab, on a document, on your notebook, right? Doesn't matter. All right? So once again, the 5 things that we're giving a score are the confirmation, the levels, the risk, the bias, and the liquidity. So let's get into it. This is the first one. Pause the video. What score would you give this trade? We are here, and this is what price is doing. I'm gonna zoom in before you pause the video. This is a 4 hour. What are you giving a bias, level, liquidity, confirmation, and risk? And this is your position. Okay? So what are you giving it? You can pause the video right now. Then we'll go to the result in a second. Okay, so this is the result. Your bias is a 1. Why? Because we're trading counter trends. Your level is a 2. Why? because we just have taken out liquidity. Liquidity, obviously, is also a 2 because you've just taken out liquidity. Confirmation is a 0. As you can see, there is no confirmation. Risk is a 1 because your target is not based on anything. So the outcome, it was a winning trade. But as you can see, the score was only a 6. So was it a good trade? Not really. It was a risky one. Alright, the next one. Pause the video. What would you give this trade? This is a sell position. What would you give the bias, the level, the liquidity, the confirmation, and the risk? We are right here. And this is what happens. Pause the video and write down your score. The result, bias, is a 2 because we are bearish. Right? We're continuing down lower. Our level is a 2 as well because we're selling from an order block. Liquidity is a 2 as well because we have just taken our liquidity before moving down lower. And we have a very obvious liquidity target as a take profit. Confirmation is a 2 as well because we break down lower with a market structure shift and displacement. Risk is a 2 as well because we have a clear stop loss above a previous high above structure and a clear take profit. So the outcome, very nice move to the downside, completing our trade. The next one, pause the video. What score would you give this trade? This is a buy position. What would you give the bias, the level, the liquidity, the confirmation, and the risk? We are right here. This is what it looks like on a 5 minute. So pause the video and write down your score. The result, bias, a 2 because you're trading with the trend, which is very good. Level, a 0 because you're not trading at a very good level, right? You're just trading in the middle of nowhere. Liquidity, a 2 because price took out liquidity, plus you have a very nice liquidity target. Confirmation, a 2 because price makes a market structure shift with a lot of displacement. Risk, a 1 because yes, you have a good target, but you have a very weak stop loss. Okay, this is your position. Then the next one, pause the video. Is a buying position. What would you give the bias, level, liquidity, confirmation, and the risk? We are right here. Okay, this is the position that we have taken. Okay, so pause the video and write down what you think the result should be. So this is the result. Bias is a 2 because you're trading with the trend. Level is a 2 because you're coming out of fair value gap, so out of a very nice potential B1. Liquidity is a 1 because there was no liquidity taken out right here before making the move. Confirmation is a 2 because you have a very nice push to the upside. You already had a market structure shift before. Risk is a 2 because your stop loss is placed underneath the previous low and you're targeting the next high inside. The outcome is a very nice position like this. Now, last but not least, pause the video. What score would you give this trade? Again, a new buying position. We are buying right here. What would you give the bias, level, liquidity, confirmation, and risk? 5 minute looks like this. So, pause the video. What would you give this trade? Result, a very poor position, right? Bias, a 0, because you're trading against a trend. It's an obvious downtrend. Even though you've taken out liquidity, doesn't matter. Level is a 1, because we're taking out liquidity, but that's the only thing. Liquidity also a 1, because you've taken out liquidity right here. Confirmation, a 1, because yes, there is displacement, but there is no market structure shift. Risk, a 1, because yes, you place your stop loss underneath the low, even though the low doesn't make sense. You don't have a clear target. So the outcome is a losing position. I think this is a position that a lot of you take more often than you should, right? Because you just judged taking out this low right here. So the system doesn't remove losses, right? It removes bad trades. And most traders, they don't lose because they can trade. They lose because they take trades they shouldn't take. So we want to really make a behavior shift, right? From now on, it is not that you don't like a trade or you don't feel a trade, you grade a trade. Now that you've seen how this works in real scenarios, let's see how one of my top students changes trading forever by implementing a proven system. So in the next segment, you will see an interview from me with one of my top students, Mohammed. He was able to trade next to his job and eventually also quit his job and trade full time. This is really the reason that I coach people right? Being able to help them, even though I'm just guiding them and they, of course, have to do all the work themselves, it still gives me a lot of satisfaction that I know I was a part of Mohammed's journey where he made almost 2 years' salary in 2 months and he was able to quit his job and now trade full time. So today we're here with Mohammed. And first of all, welcome. Thank you for joining in on this interview with me.
No worries. Thank you for having me.
For sure.
Thank you.
So I want to ask you a couple of questions today about your journey as a trader, as
Oh,
it has been an interesting one. I want to go back to the beginning a little bit, and I want to ask you what got you into trading in the first place.
sure. Yeah, I started trading around like 2018, 2019. During that big bull run of crypto,
Mm-hmm.
2018, 2019 bull run. And as anyone else, like I was also looking into, making money out of crypto and how to do it. So I started like looking at the charts and all for crypto. But at that time I was more into like just want to make money. I don't know how this stuff works. So for months, like I was just looking at the different signal providers in my
Mm-hmm.
country, and I was looking at like just to make quick bucks out of it, put some money in, maybe for long term, but nothing, about reading charts and anything. So of course lost a lot of money there after the crash. And
Yeah.
it made me think like only if I know like how these markets work, and what goes all on the charts instead of looking at the signals. So after the crash, m- crypto went pretty silent. There was not much going on. Signal providers not doing anything. Everyone just packed their bags and left, waiting for another one.
Mm-hmm.
So that's when I came across forex, because that goes on like all the time. And I felt like maybe if I want to learn how these markets move and the charts and all, forex would be a better option. So I started looking into it. And yeah, I it took like few months to just get used to these charts and the
To just
candles and
shift.
what
Yeah.
what yeah what the indicators are, understanding the volatility, because this the markets are completely different from crypto. And just understanding the basics of it. So the old school, higher highs, lower lows, and all of that stuff, basic indicators. But to trade for me it was not possible, because I'm from Pakistan. And if we want to trade proper in a proper way where we make money, you know you need good capital and in dollars. So if I wanted to do it right, it was not possible for me to do from there. And then yeah, during that basically I found out about prop firms, and they give you money and all of that stuff. So that's how it started.
Yeah.
And it was back in like 2019. So I've been looking at the charts on and off since 2019.
Yeah.
Yeah.
You mentioned you're from Pakistan, and that's
Yeah.
the country where you come from. You're currently
Yep.
living in the UAE, correct?
Yes.
How is that with prop firms? Is it any better? Is it different?
I think there are no restrictions for uh, trading. And in general prop firms, I like it's a lot of the traders are particularly living here because of the tax
Yeah,
situation as
exactly.
well. It's not, I don't know exactly, but what I've heard is like it's not the it's not like US or different countries in
Mm-hmm.
Europe where you have to pay a lot of taxes. So in that regard, like it's good. No restrictions as well. So it's pretty big here because a lot of big traders are here. No restrictions as of now that I've seen with the prop firms I've worked with. So that's good as far as.
Yeah, that's
Yeah.
definitely a positive, but also
Yeah.
some negatives. Okay, so still being back at that place a couple of years ago, before joining me, what was your trading like? What were the things you were struggling with the most?
So previously, I was doing. I was. It was those forex was so new. I was still trying to like in the as a new trader. Basically, I did not have the idea to manage my trades. Not sure like what sort of trades should I be in. Like I was very like I would look at the charts all day. So I had no concept of having like a fixed time to trade in,
Yeah.
creating my own trading window. All of that stuff like was missing. So if I'm up at like 6 in the morning, I'll trade Asian session as well. If I'm like waking up late because of work, I'll do one New York session as well. So it was all over the place, and I was having success here and there, but of course it's like a 50-50 chance, like either the trade goes your way or not,
Mm-hmm.
that sort of situation. But I was making like, if I was able to pull 1 to 8, 1 to 9 trades before as well, but the frequency was very bad. And
Mm.
um so yeah, there was a lot of like basics missing in terms of like, trading a proper window, or understanding the market sessions, understanding the calendars. And of course psychology part is a bigger one, that is still one of the things that I'm
For
trying
sure.
to improve on. But yeah, at that time it was like the structure was missing, definitely.
Yeah, structure and systems.
Yeah.
Yeah, talking about psychology, what is, you would say, one of the biggest mindset shifts you had during the time working together?
I think the one of the bigger shifts was before I joined you. I think I was not looking at trades for 1 to 2, 1 to 3. I
Mm-hmm.
was always looking for 1 to 5, 1 to 7, 1 to 8, and because I was getting them occasionally, like not enough to be profitable, but I was
You
getting
were
them occasionally.
rewarded.
So I was like, yeah. So I was like, yeah, it can work. It's just me. I have to fix this. But I married to the idea that this can work. So
Mm-hmm.
I was keeping my attention towards those sort of trades, and not 2 to 3 hour ones, and keeping my trading simple as well. So after I joined you, I think after 2 3 one-on-ones, I think um, the idea of doing 1 to 2 trades started to see look like much better,
Mm-hmm.
because the way we also approach the prop firms with your plan, I think 2 to 3 trades were enough to pass the first phase
Exactly,
very
yeah.
easily. So it was very like relaxing in that term, that yet 1 to 2 gets you like good head start, instead of chasing 1 to 8, 1 to 9.
Mm-hmm.
And it basically, the reward is there, so it doesn't affect you mentally, that yeah, at the end of the day I ended my day at like 2 hour, and tomorrow I have the buffer of 2 losing trades before I go break even again on my challenge.
Yeah,
So yeah, definitely that helped in that regard, of course, after joining you.
yeah. I see that nowadays you're still taking big positions. Do
Yeah.
you feel like you're doing this more controlled or there's more balance? How do you approach this now?
So there have been some switch changes in how I've been trading. One of them is basically, I'm trying to look for trades that are like, I'm trying to catch big moves but I'm waiting a lot for them now compared to
Mm,
before. Before I was like, yeah, I'm just getting in and expecting 8 or 9 out of nowhere. But now
exactly.
I'm waiting a lot for like, okay, this is my target. And it's not mainly big trade, it's mainly where the market can go, right?
Mm-hmm.
So if I have entered in a position where now market can go, you know for example, Asian high or Asian low, or previous day high, previous day low, and it is 7 or 8 hour, I'm taking that risk, because it seems like the market direction. Of course we cannot predict the market, but that's the game we are in. And
Exactly.
I feel like it's more controlled, definitely. I still am. The bigger problem with these big trade is that if you want 8 or 9 hour, you need to have your stop loss very close, very
Small.
yeah.
Mm-hmm.
So that was basically, I think, if you lose one trade instantly, right? Like if it is the trade is going to be a loser, it will happen in 3 4 minutes.
Mm-hmm.
So it affects your psychology. Is like, okay, I have time, I can take one more, and I can
Mm-hmm.
take one more, and I can take one more,
Exactly.
which can lead to,
Over
of course,
trading and
over trading and all of that.
burning the accounts. Yeah.
Yeah.
No, I get that. Yeah, it's a fine line that you have to walk
Yeah.
over. It's definitely difficult, but can also bring very good
Yeah.
results with it if you can balance the right way.
When I joined you, actually, it was also like the time where I was working full time.
Mm-hmm.
So I, instead of looking at the trade and the charts all the time, I made a switch to sticking to pre-London, and then for second 1 or 2 hours of London. I would trade New York or any other session occasionally, but my ideas would definitely would be there in the London or pre-London, because um that is the, I think that is a bigger shift that happened compared to looking at the charts all day now. So we were talking about this before as well, like before the call. Like I just woke up and looked at the charts, and the ideas that would have been my plan in the London or pre-London, it didn't happen. So I'm not looking at anything right now in terms of trade. So that's a big change, I think. It keeps me away from charts,
Yeah,
definitely.
yeah, exactly. Talking about working a full-time job, a couple of days ago you told me you were able to quit yours. Big
Yeah.
congratulations.
Thank you.
How did that feel? How is life now?
I'm sleeping a lot. My Whoop chart is like, yeah, you're all green now.
Yeah,
You're completely removed your debt to, your sleep debt is gone,
yeah.
and it's all green. And I'm like, okay, that is also a different life.
Mm-hmm.
Because the thing is, I work here full time. I was working here full time. I was trading as well, and then I was working with my clients in US,
Mm-hmm.
because to be very honest, like you don't get paid well here in UAE. If you, it's just the job market is not the best,
Yeah,
and especially it is the case, if you are coming from a different country, if they bring you here, basically
yeah.
it's not the best. It's comparatively, and especially if you compare it to the US clients I worked with. So I could not drop them as well, so I was
Mm-hmm.
working very late. I was working in the 2 in the morning, and then I'm waking up at 7 or 8 to go to the job. So it was a mess, but like I was sleeping 5 hours pretty much every day.
Crazy, yeah.
Yeah, so it's a, now I can, like, I have more control over it. I have you know I can trade more free, more, I can put, because I was trading from my office for the longest time. Like I was
Yeah.
trading from one laptop screen, because our office was a very separate studio.
Mm-hmm.
So I would just connect into my computer and just do whatever I wanted to do, or use my phone to trade. um, so that's a big shift, of course. And
Yeah.
then sleep is a bigger factor. I can
Yeah.
sleep more now.
Yeah, exactly.
Yeah.
No, that's very cool. Do you feel like, yeah, you're able to sleep more, which is a benefit. Do you feel like there are also challenges now that you're doing it all on your own?
It's a new challenge, of course. It's a new challenge, but it was coming from a long time. I think when I joined you is
100%.
when I started, like, it was the third month or fourth month when I joined you. It
Yeah,
was the
very
third
early.
month, I
You
guess.
started
Yeah,
making money
it was.
already.
Yeah, I was on, like, probation when I started. Why when I joined you and your consultation.
Mm-hmm.
At that time, I was talking, like, I want to leave at the end of the year.
Mm-hmm.
um Things didn't work out, of course, at the by the end of the year. But then this year, in the first quarter, I was able to make some very good
Money.
profits out of
Mm.
everything.
We'll get there in a
That
second. Yeah.
Yeah, it was a, so the plan was to end this year. At the end of this year, I was definitely going to leave. I've already told my team as well, like, I'm not going to stay after this year.
Mm-hmm.
We have an event in November. I'll do that event and I'll leave then. And while I was, like, sure of it, I was also thinking, like, if things don't work out, I'll still be at that job.
Mm.
But things changed. We'll talk about it. But things changed, and I was able to just instantly make that decision because of it. And yeah, now it's free, a lot of free time on my hands.
Yeah, very cool. Before we
Yeah,
get to the results, I want to talk about your strategy and your risk
sure.
appetite a little bit. What does your trading routine look like now? As before, obviously, or maybe you can talk about during the job timing as well still. But what do you do like in the morning and basically until you take the trade? What does that look like?
So usually, like, so since I've left the job, it's been, like, I think 2 weeks or 3 weeks now. I haven't had like proper trading routine yet because there's a lot of things going on. I had a notice period as well. Then I was applying for staying here for the long term because
Like a new visa.
yeah, so I got the we started our own company here for broadcasting is what I do full time. So I'm staying now as an investor here.
Nice.
So I have my own residency, so that was being sorted out. So I was looking at the charts on and off, but I was not. I'm not yet into full trading mode, if you'll say. But before that, it was the same. Like my go-to idea is basically, and what I really like trading on is pre-London, that is Frankfurt Open or
Mm.
London Open, and basically based on what happens in Asia, and if we can take out liquidities on either of the sides and look for the opposite move. That's what my go-to idea is for the trade. So it gives me like additional confirmation on how I want to trade for the day. But majority of my, like, I think 90% of my trades come from this time, and then some trades come after late London session or late New York session.
Yeah.
Sometimes after news or something happens, and then market has some that volatility. So if it hits your areas, the,
Then
the
you
marked
enter.
areas on the higher time frames, sometimes I jump in on that. But if once I'm back from my vacation, probably the trade plan would be to just wake up around like 9 in the morning and just analyze the chart for the day, try to trade Frankfurt Open or London Open, and then be done with it. That would be the ideal goal right now.
Then you
I don't
go
know how
to
things will
your
be.
business.
Yeah, then I mean I have like multiple clients that I work with. So they keep me occupied
Mm.
from 2 in the noon till late
Yeah.
night.
Good.
So that's good as well. So my ideal trading time is basically Asia, and then London and Frankfurt Open. That's where I've been more
Amazing.
successful.
Yeah, it's the best
Yeah.
thing. Would you say that your strategy also evolved over time? I see the last few things that I saw from you is that you're using the IFEG a lot.
Yes.
And
I
quite
mean,
wondrous, right?
yeah, it has changed like a lot. So from our base, so it still has the base that we studied and we you brought to us, but there were a lot of different changes that I was seeing in the market that were happening during the time frames that I
Yeah.
I trade on. I like to trade like, because I've been in the beginning, I've been treated with these bigger R's, so I cannot keep myself away from it. So I
Yeah.
try to like go into the shorter time frames, and shorter time frames work if you have like some backtested strategy. I haven't backtested these IFEGs yet, but in the forward testing that I've done in past 6 months, the results, like the way market moves after FEG is just IFEG is just different. And
I've seen that as well.
um,
Yeah. I use
yeah,
it as
it
well
just
now.
moves very quickly.
Yeah.
It moves very quickly, and it just gives you, my ideal trade would be if I wake up and I see Asia highs have been gone in the if the London session opens or Frankfurt opens with a very big one candle that just completely takes the fair value gap that was on the long side, and it now becomes an IFPG for bearish. I'm
Hmm.
just going in, like, because I know the momentum is on that side. So it has like, it's not, again, I don't think it is a 50% win rate as well. It's less than that, but the frequency of it happening is a lot more than a usual trade that I would look at. Plus it, like, the trades are over in like very few time. Like it happens,
Yeah. Short amount of
if the
time.
move you're looking for 1 to 3 or 1 to 4, it happens like within 40 45 minutes. So it gives you like a very big confidence boost as well, like that your idea was just it just worked because of the marking you've done on the IFPG. Of course there can be a lot of different factors, some other people would call something else, but for me it was like, yeah, that was a bit game changer actually this year.
Yeah. Nice. Talking about that game changer, let's talk about the results. What are
Yeah.
yeah? What do we need to think about if we're saying results? What is it you've gotten so far? Funded accounts, returns.
Yeah. So I had like, when I joined you, I've had like multiple phase twos. I haven't had funded account until then.
Mm-hmm.
Then I joined you. I started trading the 2 hour, 3 hour method that we went through, and I started like getting some results. That's when I got like three of my
It was
accounts.
very quickly, right? I remember
Yeah,
that you paused almost all of
it was
them
in few weeks.
in a
Yeah,
few
I
weeks.
was
Yeah.
actually at that time it was just like, it was, everything was working, everything was clicking,
Mm-hmm.
and it was, I think I passed three challenges. One was with FTMO, one was with Alpha Capital. I think two were with FTMO, but all of them were 10Ks.
Yeah.
So I was getting like, I got my, I guess, four or five payouts combined. I got three from Alpha Capital. I got two from FTMO before, of course, I blew them, but I got my money back.
Yeah.
Got some from them as well. And then there was a bit of a break after, because of course, if you get funded after 5 years and you lose them after a month, it is
Mm-hmm.
going to take a emotional toll at
So
you.
yeah,
So I was
100%.
like, yeah, I don't want to trade anymore until, I feel like I have first money to spend on these challenges, and
Yeah.
second, if I can, continue doing what I'm doing. So I was trying to like get these one or two challenges here and there, but I was not getting to the funded point again, until, I guess, end of January, end of December, I think,
Yeah, I
is
think it
when.
was end of last year because you were busy with work. I remember.
Yeah, I went back
I
home as
remember we
well.
were calling and you were
Yeah,
all in like
I
an
was at the
airplane
I was
flight
at
or
the event
something.
as well. Yeah. I
Yeah.
was at the event. So I was trading on and off. I was not full properly trading. So I was at, October was a big event for us. November,
Mm.
big event for us. I was traveling a lot as well to Saudi and every other place because of the work. So, and then December I went back home. Then I was bringing my family here. So I was very busy until like late January, is and then in Feb and March I was like, let's get back to it, and see. And this time basically one of the things I did was I just went for the 100K challenges
Yeah.
because first I was making money with my other clients. I was like, if I'm going to trade, and trade the same ideas, might as well just do it with 100K instead of 10K. I know it's like not the best advice for new people,
No,
but
for sure.
it's not. But one thing that I've struggled
I
with is
think
like,
I'm
you have
sorry
to,
to interrupt you. I think a
yeah,
big thing right now that you mentioned it is, and also a very big difference, perhaps I think for me it was a big difference, is the first time you tried it with not having enough money, so to say, in your
yeah,
bank, and the second one you tried it with having money.
yeah,
And I think this makes a huge mental difference,
yeah.
where there's not a lot of pressure on these prop firm challenges.
Yeah, I was like, my goal was to, you know, try to. I, I mean, the goal always is to, pass the challenge, but at the same time, it's like this 100K challenge. When I took that challenge, and I don't exactly remember when, I think it was Feb, end of Feb or something.
Mm.
I was like, I'm going to pass this, I'm going to pass this challenge, and then we'll see what happens. So I passed my first 100K challenge. I got 8K in the payouts. I know I got 4K in the payouts from the first one.
Nice.
Then I got the refund. I bought another 100K with that. Um, I got 12K from that profit in one go. So that was a 12% profit in the second one. So I had 200K in funded challenges. I bought another 200K then with them only, with FTMO, and I passed that as well. So I reached max allocation by end of May, I think, or June,
Mm.
and I was like, okay, this was not this is not expected.
Yeah.
During that time, I was thinking like I have to leave my job at the end of December, and then the 400K allocation came, and I was like, okay, wait, I think this can happen in few months. And then I got like, um, 12K, 14K in additional payouts. So my total was basically 26K from FTMO in two payouts, three payouts in a span of month.
Yeah.
And yeah, it completely changed everything. Like it
Yeah.
was like, okay, now I can actually leave my job because it just created enough buffer. It For me, it
Exactly.
was like 1.5 year of salary. I was
Mm-hmm.
like, why am I staying 9 hours there when
Yeah.
I have that
So
money in bank
crazy.
account? Plus I have my other clients as well,
Yeah. So, but
so I can, like,
gave you
it's not like
safety.
I'm not going to use my uh prop firm money that I've got. I still have client that can pay my bills, while
Exactly.
this money just sits as a good saving spot for me. So it completely changed my, like, the moment I got those two payouts, because if you remember, I was talking in the group as well in our Discord
Mm-hmm.
that I don't know if they'll approve mine, because
Yeah. Yeah. I know.
that sort
I
of trades
know.
I've taken in those, they'll be like, yeah, you've taken too much risk, because
And it's
two of
almost
my
like
trades were like,
this
yeah,
self-sabotaging voice that starts talking to you about,
yeah.
oh, this
I
can't
was
be
like,
real, right?
so I hit max allocation in June, and then I gained enough, like, uh, of course it completely changed, but also, like, the amount of challenges I've you paid for, I think it was all done as well, and I got all the money back
Yeah.
technically, and
Exactly.
I saved a lot of money as well from that. um so yeah, in terms of results, that's what happened in the first quarter, second
Amazing.
quarter, basically.
Yeah. Amazing.
Yeah,
Very, very good start of the year. How did
yeah.
it feel to get your first ever payout? I think that one is always special, right?
It's always special. I think it also gives you a stamp that it works,
Yeah,
because
exactly.
it's until unless you have the payout, there are some voices always in the background that, yeah, it cannot be real. Like, why are they paying you this amount, right?
Mm-hmm.
Why would anyone pay you? Right? It, but if you talk to your friend, they'll be like, yeah, you are just wasting your
Yeah,
money on it and everything.
exactly.
So it definitely helps, and regardless of the amount you get, it's just a stamp that if you're consistent enough, this is a viable option, not just a viable option for steady income, but you can make, like, crazy amount of money from it as well if you are properly managing yourself.
Exactly, 100%. Yeah, that first payout is always special because indeed it unlocks like, okay, it is doable and it is real.
Yeah,
Um, and I think you don't get that feeling until it hits your bank account. And this is the same thing with
yeah,
the 12K payout that you had. Until it
yeah.
hits the bank, you don't know if it is real.
Yeah,
Yeah.
yeah, true.
Cool. Now that we've handled that, let's get into the essentials. Now it is time that we go over the essentials. So, what are the essentials, you might ask? Now, of course, first of all, we need to start with your trading journal, right? Because this will be your Bible. It is one of the most important things that you can do. Afterwards, we will go to backtesting, right? How to backtest, what to use for backtesting, and then you can go ahead and open your first account, a demo or a small account like we talked about. So, your trade journal setup. This is what turns trades into progress, right? It is a very, very crucial step and a very crucial thing to include in your daily habits. Now, why this matters? Without a journal, you're guessing your progress, right? You don't see patterns, you don't know what works, and you repeat the same mistakes over and over again. That is why you will see traders that are trading without a journal, they're staying stuck. Now, the system works. The system that we're talking about today works, but only if you track it. You need data, you need feedback, and you need consistency. This is literally what separates serious traders from everyone else. I will take you inside of our own journal and I will show you how to create/open the journal, how to connect your broker. You can auto sync this if you want to, and how to use the grading system inside of this journal as well. Every trade must be logged, no exceptions. Okay, if you want to use the exact same journal that I'm using, there are two ways to go about it. Both of those ways include that you go to the second link in the description and you join the community. Inside of the community, you can find this course, you can find a lot of resources, and you can also find this free journal. Then you go to Momentum Journal. Right here, you can also watch the video on how to use a journal, and you can join in and open your own journal. Now, there are two ways to go about it, right? I work with a third party, so there's a free version. That's the one that you can see right here. You don't really have insights on your data, but you can still lock your positions. Lock your positions like this. You can also put in screenshots. You can put in tags, executions, everything like that. You can do right here a new category. Great. And then you can do, for example, liquidity is a 2. And then you have to create it as if it is your first time. But you're going to do this for every single one of them. And then you can do this for every single category. Now, what is nice is you can also use the chart if you forgot to take a screenshot, to take your screenshot on here. You can put in your risk management that you have used. So it's a very, very nice platform to use. But the free version really doesn't do it justice. So there are 2 ways to go about it. Or you can upgrade and you can choose the monthly plan, the yearly plan, or the lifetime plan. And I'm not joking, you guys. This is literally the cheapest that I could have made it. If you see it right here, 200, minimum of 200, 20, minimum of 20, and this one, 100, is also minimum of 100. There's also another way to go about it. I am just launching JoraFX Trading Floor. You can join this and basically come trade with me, right? I will be live trading. If I'm not live trading, I will be uploading a recording of the trading. I will be doing group coaching calls in here. Plus, I will also pay for your subscription for the journal. Then, if you have the full paid subscription, this is what you get. You get full insight into everything, okay? Let me make sure that you can see everything right here. So, this is the journal, right? You can see your total trades, your win rate, your gross P&L, your average, win-loss, literally everything. You have a curve, you have your monthly, you can see the last 30 days right here, right? If you go to the left, you cannot see this on my screen, I see, but you have overview, detailed, trade log, calendar, mentor mode, that's for me. And then admin panel is also for me. But detail, right? You see literally everything right here. Trade log, you see all of your trades right here. This is a demo that I'm using to show this to you guys. Then your calendar, you can see all of the trades that you've taken right here. On top, you can change your date range, your currency, filters, your portfolios right here. But the coolest thing, literally, the coolest thing, or basically 2 very cool things, is that your trade log, what you can do is when you add a trade, you can use autosync. Autosync, and you can literally add your broker. So let me, for example, show that to you. So this is one that I've connected on here. Let's do add a broker, choose a broker, MetaTrader. You cannot see this, but it is show. I don't know why. A MetaTrader, TradeLocker, Coinbase, CTrader, Trade-of-8, CoinW, Bluefin. So let's, for example, do Trade-of-8, and then you can literally fill in everything right here. Like, how awesome is that? Another very cool thing is that there is mentor mode included. So when you join the group, all of you will share this journal with me, right? So then when we're on calls, I can literally go over these very, very quickly and give you tips and tricks on what you need to improve or coach you right on the spot on these things. Now, of course, my one-on-one mentorship students, we talk about this daily, right? Every single week, we go over all of their trades, but also for the group coaching, for the trading floor, I can every week easily review some of your trades if you have questions about them. So literally, it gives you a journal basically for free because I am paying for it inside of that community, plus so much more. If the free version is not for you, if you do not want to pay for this journal, I would highly recommend try building something in Notion that will track everything that you need. So definitely all of these things that you see on screen right here. But if you're looking for a guidance and a journal in one, then I think this one is a very good one. Now, the flow that you need to use whenever you're taking a position. So if you're doing manual entry, right? Right here, you're going to put your symbol. So let's say, of course, we are trading Forex then. Let's say you're trading Forex, Euro USD took a long. This is your P&L. Let's say you made $1,500. Your entry price, your size, if it was a buy, if it was a selling position, you would do this, right? Now let's go to a trade that are already locked on here, for example. So right here, you're going to put down your psychology. Everything that you thought when you were taking this position, because when you're going to be looking back at this at the end of the week or at the end of the month, you will not know why you've taken this position, right? So you write down everything right here. You can tag your strategy in here. Then right here, you can give it a grade, depending on if it is liquidity a 2, a 1, or if your bias is a 1 or a 2 or a 0, right? You can all select that in here. Then executions, once again, if you did not make a screenshot before, you can watch it back right here, the position that you have taken. Also your risk management, if you have taken multiple profit targets, you can add those right here. And then again, on the bottom right here, I can review your position as well. And that is how I want you to go over your positions every single week, right? At the end of every week, so let's say every Friday or every Sunday, you go over your journal and you look at the entries that you have taken, right? It is important that you fill out everything completely after your trading session. So you fill out everything, all of your tags, right? And you make sure that your journal is as complete as possible. Also include as much as possible screenshots. So what I want you to do is whenever you've taken a trading position, right? For example, this one, I want you to go to the camera symbol on top. And unfortunately, you can just not see that on my screen, but right here is the camera emoji on the top right. You click that, then you do download image or copy image, and you post it inside of your journal, okay? You do this for every single time frame that you have. So the higher time frame, let's say you use the 4 hour or the daily, so the 4 hour or the daily. Then the middle time frame, let's say you use the 30-minute or the 1 hour. And then also your entry time frame, maybe the 5 or the 10 minutes, right? Very important that you include all of these so that not only you, but also I or any other person that will be reviewing your trades some days has context. Then you post them in here. So you can literally post them inside of these trade notes. Then you save your notes and that's it, right? As easy as possible. And then you get data on everything right here as well. So get yourself a journal. Doesn't have to be this one. You can also use a free version of this one, or you can build yourself one on Notion, or even use one of my old templates for Notion. But journaling is super important and you want to make it as easy as possible for yourself. So that's why being able to connect your broker and sync your positions is very, very key. And that, of course, you cannot do with a self-made journal, unfortunately. So if you want to use the exact journal that I use, join the free community. Actually, for the one that I use, you need to join the trading floor or the one-on-one mentorship. As I've shown to you, my hands are a little bit tight with the payment options. You will have access to the journal instantly and you can start tracking your trades properly right away. Now, if it is not journaled, it didn't happen. Really remember that. This is how serious I want you to take it, that everything needs to be inside of your journal. So now that you know how and why to journal, let's see how to practice your trading by backtesting. So now we've gone over journaling, it's time to go over backtesting. This is why you practice. This is probably, again, one of the most important modules inside of this video, as this is really where practice makes perfect, okay? So backtesting, where you actually get better. It's not in the live markets. It's right here. Now, most traders don't improve. They just watch content, they take random trades, and they hope experience fixes it. And that is not how skill is built. They just basically pretending to themselves that they're productive. But how you actually get productive is by backtesting. It's really the only way. Now, what backtesting fixes? Backtesting removes the noise because it is just execution and data, right? No pressure, no emotions, and no real money involved. Why this matters? If you can't execute your system in a controlled environment, you won't execute it under pressure. This is where it starts, right? That's why you need to be good at backtesting first before you can go and execute it under pressure. So, how to backtest? Here's how you do it properly. Pick one model and go candle by candle. Don't start skipping and flying through this, okay? Do it really controlled and really focused. Then only take valid setups and track everything. No skipping and no guessing. All right. So what we use for that is FX Replay. Here's a code for you guys that you can use with a discount code. The discount code is JORFX or JORFX7 on yearly plans. Use it. It gives you a cheeky discount and you will see in a second that FX Replay is worth every penny, right? I think it is hands down the best backtesting software in the game. It might cost you something now, but it will make you a lot of money once you start getting payouts. So now, let's replay real market conditions, practice execution, and log trades properly. Before we do that, every trade should answer, was it valid? Did I follow my rules? And what was the outcome? Right? This is how patterns become visible. And most traders, they skip this step, backtesting, and that is why they stay stuck, okay? Now, let's dive into the charts, this time FX Replay, and let's backtest together. This is also very nice. You can commit to your practice, right? Committed goals get completed 42% more often. So you can use that to stay committed for yourself. There's also a nice streak on the top right. But right now, let's start a backtesting session. You can also do prop firm challenges right here with a target, with a max daily loss, with a max total loss. And this way you can see, okay, am I able to pass my prop firm challenges? But for now, let's just do a normal backtesting session. And let's call it free course, right? Because that's what we're doing right now. We're doing $100,000 and let's just do, for the ease of it, Euro USD. You can, by the way, choose anything. right? You can choose NQ, you can choose ES, you can choose gold, be it the forex gold, right? XAU USD, or be it GC, so the futures gold. You can literally do everything and anything, right? Initial date, you can go back a long while, okay? As you can see, all the way up to 2002. That's a lot of data. Now, as we're just going to backtest, let's just do 2025. Let's just pick a random month, maybe May. Let's just do the 4th of May as the 5th will be a Monday. And then end day can be today, doesn't really matter. You can also pick a random date. Okay, there's also to practice so that you don't know, okay, where are we gonna land? Then create a session. We're gonna load. Here we are inside of a new session. Let's quickly change the layout really quickly. And as you can see, it is just TradingView, right? Okay, like this is good. Now we really want to pay attention to grading our trades. First of all, let's select the time frames that we're going to use. So I want to have the daily, I want to have the 4 hour, I want to have the 1 hour, the 30 minutes, and the 5 and the 15 minutes. Okay, this is now my arsenal. Can't really see it due to my recording, but I have the 5, the 15, the 30, the 1, the 4, and the daily. So let's start out on the daily. Daily, as we can see, is in an uptrend. We're in an uptrend. We've taken out these highs right here. So what does this tell us? This can be a good A to B play, right? So A down here, B up here. We could be in for a pullback. And by the way, I have been trading these markets, but my memory will be very good if I'm able to trade these correctly. So I have literally no idea actually what is going to happen afterwards. It has also been a while since I've traded Euro USD, as I'm trading mostly futures now. But still, let's just use what we have. But I wanted to mention that, as obviously I have seen these markets 2025. Now, the 4 hour is going sideways, as we can see. So the daily we know, okay, is bullish, but we can be in for a pullback, as this could be point B that has been completed right now, right? It actually is point B that has been completed. Not could be, but it is. So this point B has been reached. So now we have to ask ourselves, okay, what can be the new point B? First of all, we need to ask ourselves, okay, the new point B could be down here. Point A is then up here, right? Or at least that is what we think at the moment, as we are also creating a bit of a bearish structure. First point B can be here. Second point B can be somewhere down there, but let's first focus on this one. So then on the 4 hour, we're going to determine market structure, right? Let's see what we can do. So you have your high, you have your low right here, you have a high, you have a low, a high, a lower low, lower high. This is where we are at the minute. So we could say we are at the beginning of creating point A right here, right? So that we are turning around at this moment. Now let's go to the 1 hour. 1 hour is also in a bearish momentum. Now let's go to the next London session, for example. And what we want to do is we want to look for selling positions, right? So 1 hour can look like it is turning bearish at the moment. 15 minutes. See if we see continuation down lower. This is a good one. But we want to be in London session. So from this point on, we are in London session. Now, let's see if we see something bearish. This one is a nice one, right? We can also go to the 5 minutes, see if there is a bit of confirmation. So 5 minutes is breaking down lower, right? Creating a shift right here, breaking down lower, retesting this small OB that we have. I didn't want to take a lot of risks, so probably my stop loss will still be above these highs right here. And it will target a continuation down lower. Continuation down lower for me is targeting these lows down here. Now it is important that we're not targeting the wicks, but the body candle. So like this. This will be my position. Let's place the order. Let's save, right? That is all filled in if you're using this right here. And let's see what price is going to do. Okay, we moved up higher. So what happened right here is that price moved down lower, took out this low right here that we have, and now it is probably going to move up higher. Could have maybe been avoided if my stop loss was above these highs. Reason for my stop loss being right here is that I thought, okay, there could be a quick continuation entry inside of this move. But let's say if we're going to get a move down lower right now, then I could see a new entry happening. Stops above this high and still the same trade ID that we have. But now it is very important that we are going to respect this high. If we don't, then there is probably a continuation to the upside still in play. If we're going to break this low, I think I will be looking for an entry. Okay, there's a continuation higher. So we still have to wait for price to shift bearish and basically continue with the higher time frame. Okay, we see price dropping at this moment. We do want to see a market structure shift, right? We want to see a market structure shift to the downside before taking a position. Where will we see a market structure shift? When price breaks this low, unless of course this low is going to make a new high, which it does. So now when price breaks this low, obviously we still want to take a look out that this high will be respected and not being taken out. If it is taken out, then we probably will be looking for longs. Price now needs to break this low in order for us to take a sell, and we do on the next candle. So we can take a position from here right away, stops above the highs. We could make the position a bit better, but I don't think it makes sense if we're just going for 1 or 2 pips. Then we want to target, let's say, these lows right here, right? Just for a simple continuation. Then we're going to check, right? We are selling from this OB that we have right here. I just marked this out before taking the position. So that is our key level. Our bias is short, so we're also staying on bias. Entry confirmation, we've just broken these lows with displacement, so that is also very good. Then our risk structure, we have a 1/3 position locked in right here. Also very good, stops above the highs, targeting these lows. And liquidity, we can say we've taken out this previous high. It's not really liquidity taken, but this target is definitely a good liquidity target. So I would say 1 out of 2 points on liquidity. Now let's take this position. You can do save and journal. You will see a screenshot right now. What you will see when you do that, you can fill out literally everything. You can also rate it. You can do your confidence level, etc. I cannot do this now right here with you because then I would have to record another window. So we have to do it like this, right? But let's see what price does. If we're going to get a continuation all the way down, looks like it. It's a bit stalling, moving up higher. Oh, and there we go. A very big drop to the downside. Okay, so point A to point B has been completed, at least what we have marked out. If we're looking at structure, see price moves down here, 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 and now here. So we want to see this low being broken if we want to continue with our short bias, right? If we're now going to create higher low, for example, taking out these highs, then I would say we have to look for longs. But yeah, of course, I think we're going to break it. We are stalling and turning around. Okay, that is interesting. Point A to point B has been completed, right? At least here. Point B turns into point A. So we're going to go for a good place to sell from. So we're going to do a counter trend longs. Let's see what we have. Counter trend longs would automatically place us in a 1 out of 2, by the way, on bias. Okay, price is very bullish though. Price moves up higher, retest the fair value gap. With a break of structure, we can take a continuation to the upside. We have displacement. So if price breaks above these highs, I'm willing to get in. Stops, let's say underneath this low. And see my target. I want to have my target somewhere here, and it is only giving me a 1/1. So it is definitely not worth it. Let's just see what price does. I might want to sell from somewhere, but I need a shift, of course. Price moves down lower right here. Yes, we have a shift. We can sell. But I need a better place for selling. I need a better place as my stop loss needs to be here. Right, so we have to be somewhere here probably. We have a very big drop, by the way, from here. Okay, we are here now. If we can see some momentum to the downside, I'm getting in. There we go. So on this position, this is the one that we're taking. And we're targeting the complete lows. Probably just these lows. Just a 1/2, quick, in and out. Let's see what it does. What time is it? It is 2. So it is right before New York Open, by the way. Okay, we're stopped out. So what happened is that price moved up higher, moved down lower, take this one out, and probably is gonna hunt for these highs as well. Taking out liquidity, perhaps. Now it looks like or we're gonna continue lower from here, or we're gonna shift bullish because we have made a higher low. 2 things that are possible. If you're backtesting, by the way, do it like this screenshot on the screen right now, with your complete checklist to the right or to the left. so that you can tick off every single box while you're backtesting. That is going to be very important because this way you can also grade it right on the spot, right? Now let's see what price is going to do. Is it's going to go lower. I think I want to see it break these lows before doing anything short related really. And now it's overnight, so let's go to the next London session. Okay, now we had this breakdown lower. So if we're going to think about terms of A to B, we have taken out liquidity, which is a 2-pointer right here, right? Taken out liquidity. That's very good. That's 2 points on liquidity. Bias actually is turning bullish right here on the last few candles, right? It is really turning around. So in that way, we should look for liquidity grab down lower, which we also had, right? Also had right here, so that's good. Price is moving up higher with displacement. We need to wait for, of course, a good London Open, for example. So we have that right here. We have London Open right here. And now it is just a matter of, are we going to shift bullish so that we can take long positions from here? Price turns around right here. This is potentially a position that we can take, right? But the issue is that the target is also here. This is our point B. We don't really want to extend it over here because we don't know where we're trading towards to yet. Could be this high, but we don't know for sure. So I'm not going to do it, and we're just going to wait for price to show its hand, right? Okay, moves down lower, moves up higher. Probably going to hit these highs though. It's not. Oh, it's FOMC in the evening, so let's just skip to the next day. Because now this day is going to go sideways anyways. It's going to go lower. It's the evening. Let's go to the London session. There we go. Now, it's basically confirmed that we are still short, right? We're moving down lower. Unless we're still going to stagnate here, but I don't think that. So point A was above here, or point B is below these lows. So that is the continuation that we will be trading today. Now, if we're looking at point A to point B on a smaller segment, this will be point A, this will be point B. We're now in the middle of nowhere. So we want to be as close as possible to point A, or otherwise it's going to continue without us, all right? Now we've taken out point B, so this becomes now point A. I don't like marking it out constantly as it takes a bit of time, but this is now point A. Now we're going to ask ourselves, okay, what could be a good point B? Good point B could be somewhere here, these Savetti gaps, or this high that we have above here. And I still think we can continue lower, so I want to see price go to point B before doing something. Okay, now we are there. Can point B turn into point A? If we break some lows with displacements, we have a shift, then I'm willing to go for it. There we go. And this is my short position now. Short from here, stops above the highs. Again, it is not giving a good risk to reward, which is unfortunate. What I will be doing is I will probably be doing a limit order. If price comes here, I'm taking it. Otherwise, I just let it go. Right? Place the order. Safe. We're tapped in. And we've taken take profit. This was a nice trade that I saved in a way by making our entry a bit better. And what an entry, by the way. What the hell? What an entry. Right? Sniper entry. Okay, let's go to the next day. As I'm only going to be focusing on one trade a day for this backtesting session. So we completely bursted through it. So now you have to see this as point A to point B has been completed. So now this turns into point A again. And we have to ask ourselves, what can be point B? Point B can be somewhere in this fair value gap. We have to look at it on a higher time frame. Still ask ourselves, okay, is the higher point B not completed yet? Issue is this could be a point B right here. As this is a previous high, price often retests a previous high. But I think we have a bit more in us to go a bit lower and go for the next point B that we have. So price, we want to see it go up higher. We could potentially take a counter trend trade, or we can wait for price to complete point B, turn into point A, and then we can take a bearish position from there. There we are. Now we want to see a shift down lower. In theory, if we break these lows with displacement, we could go for it. As you can see, we're not doing that. We're moving up higher to our next point B, which is this order block right here. We are moving down lower, but we cannot make anything out of it as we do not have a shift. And now we're at almost at the end of New York session, so I'm gonna leave it for what it is. Let's go to the next London session. And we did break down lower a lot, right? So it would have been a valid position, but timing-wise, it was off. Now let's have a look at it. Point B turned into point A. This one turned into point B. It has been completed, so this is now a new point A. This becomes your point B. Trading this completely true, basically, or filling this gap up completely. I don't know if we filled up this gap completely already, but it kind of looks like it. So this could mean that point B turned into point A again. This is now point B. Let's see if we can get some type of entry. Price moving up higher, takes out liquidity from these candles right here. Could this be a good entry for me? Not really. I'm just gonna let it slip because it could also be very, very bullish, of course. This one took it out very nicely. Move down lower, but there is no shift. Okay, here we have the shift, of course. And it is moving down lower. So on the high time frame, we have to pay attention to, are we coming to this point B right here? Now on the lower time frame, point A, this one turned into point A. Point B has been completed. Now you want to see a new point A being formed. Moving down lower. This could be a point A. We don't know yet. Could be a point B. Price took out liquidity for what it looks like, at least now. It's moving up higher. I want to see a shift. There is no shift yet, so we cannot go for longs yet. Now we can, right? So this is now point A. Point B that we want to look at, probably this OB, somewhere in this gap. So we could take longs, but probably more a fan that we wait for price. I was going to say for price to turn around, but we did hit this point B that we marked out. So I probably am a fan of longs as well. If we break these highs, I'm probably going in for longs. Take a long position, stops underneath these lows. Maybe let's see if we can make our position a bit better, like this. And then let's see if we can take it up to these lows. Let's put in the order. Let's save. Tapped in very nicely again. We are making a bit of noise right here. But we are moving up higher. And we've completed the position. Very nice continuation to the upside. So we could say point B has been completed, but we don't know if it's going to turn into point A yet. Anyway, the session is over, so let's move to the next London session. Okay, potentially could turn into a point A. It is stagnating, it is consolidating. If we now see a shift lower, we want to see a shift to the downside, then we can take a position down lower. Also, something liquidity taking would be nice. Could be liquidity. Now we're breaking out higher. Okay, breaking out higher, meaning that this was the overall point A from the higher time frame. And we're basically going to look for a continuation, right? So point B that we have to take out are these highs right here. So that is what I want to be trading today as well, right? Price consolidates, moving up higher. Okay, this is good. Now if we see a shift to the upside, we can take our position long. If we move above these highs, with displacement, we're going in for longs. We are moving above highs, but not important ones. Moving down lower, taking out these lows. This is, by the way, really a skill that you need to train, guys. Being patient in the markets. And we have to go to the next day, next London session. Okay, we are shifting again, right? We're shifting bullish. We made that shift right here. So again, we want to go for longs, but we also want to see a bit of a continuation shift right here with displacements. There we go. And price is basically gone, right? Price is basically gone. Taking out these highs, okay, make a bit of a pullback then, and then we can go for a long if we shift again. There we go. Can place our stops here. Maybe we can have a bit of a better entry like this, and we can take a continuation up higher. Right, we want to see a continuation, so this is a position that we want to take. Place the order, save. There we go. And the complete mess afterwards. Right, only taking this position as we already made the shift right here. But maybe I was wrong about the direction. Maybe this was point B and we respected it. So let's see if we turn down lower. Let's go to the new London session. And it is just a mess. It is just a mess. Okay, noted. Let's see. Price still wants to move up higher. So still, I am going to favor that, as I really think we shift up higher right here by respecting this point A, moving up higher. Now just messing around, and then we'll probably move through it. So that is going to be my bias, right? I want to stick with my bias, as I think it is one of the most important ones. Price moving up higher. We want to see displacement above. Not really. Not really. Okay, it's just moving down lower. Did we now make the shift down lower? I think we did, right? We failed to break these highs. We are shifting down lower. And we also going with displacement down lower. So probably just jumping ships right here. Going for shorts. Continuing lower. Targeting these lows. It's my order. Safe. And there we go, right? Main reason that I built this trade is really that I saw, okay, we are failing to break these highs constantly, meaning that we are still in this bearish structure. So overnight, we made this move down lower, and it looks like we're moving up higher again. We're now stagnating here. Two things can happen. Or we can break out to the upside. Then this is the point A after all, right? Or we can respect this move down lower and target these lows. So let's see what's going to happen. Okay, we're breaking out, but it could be a grab. No, we're very, very displacement to the upside. Okay, very displacement to the upside. We're long and we're gone, right? This was the right point A after all. Let's see if we complete. Yes, we complete the move now. So this point A turns into point A anyway now. And see if we can find a pullback. Where can we find a pullback towards to? Probably somewhere here, right? This mess here. See if we can make a shift. We already made a shift right here. This is on the lower time frame then. So let's see if we can take a position down lower. Stops above the highs, maybe a bit of a better entry. Very, very little bit. Then we target point B. Point B are these highs. So yeah, this is fine. Let's take our position. Place the order safe. There we go. Moving down lower and take profit hit. This is a very nice one, right? Where point B turns into point A right away and it shifts right away. You take your position and you move down lower. Again, a very good entry, by the way. So point B, if it is going to be completed, we don't know yet. Looks like it is, so it turns into point A. This turns into point B. We cannot take an entry as it is overnight right now. So let's go to the new London session. Hopefully it's still here. It is still here. We want to take a position up higher. So we want to take a position up higher. I think continuation play could be a very good one here. Right? Again, maybe take... I was going to say take a better entry, but I cannot because this is a breakout. So my stop needs to be here. My target needs to be here. It's not really worth it for me. So I'm just going to leave it, but I'm not going to enter this one. Okay, looking nice. Ooh, would have been stopped out. So good that I did not take it. Well, it looks like we're respecting this high so far. We're moving down lower. So could this mean that point A is unable to break point B? It does mean that. So this is not point A. This now becomes point A, and this now becomes point B because our weak low is being targeted. Let me see. I want to go in for an entry right here. This is the position that I want to take, but I want to make sure that my target is on the body candles like this. Okay. 1/2. Let's place the order. Safe. Let's see what is going to happen. There we go. Coming out of this low. Let me place my stop loss on break even, right? Just do that. I really think that we could create a higher low right here now. Maybe we're going to burst through it by the way. Nah, okay. Good stop loss break even play right here. There's also something, if you see that it's going to create a higher low and you're not sure, you do not necessarily want to get out of the trade, but you're not sure, just put your stop loss on break even, right? Price moves up higher. Is this low now able to break these highs? Doesn't seem like it. Yeah, it does. It does. Just needed a bit more of a push right here. Okay, let's go to the next day. Also a lot of news events right here, so that's probably why it shifted. That makes sense. Go to the new London session. And wow, okay. We are up quite a bit. Now completely confirming our bullish bias as we have completely turned around right here, moving in for these highs, right? So we're only gonna be looking for long positions. We are gonna want to avoid these short positions. Now on the very big move right here, this is our point A, right? Our point B is all the way up here. There's not much we can do right now unless we're going to see a very good pullback and then a move to the upside entry-wise. All right, so we have to wait. Here we see a nice liquidity grab, both sides. Do I think we are reacting to this now and going to move lower? It does look like it though. It does look like it. So price moving down lower right here. But yeah, like I said, I just want to take bullish positions. Maybe we can see a shift up higher, but it's not at a good place that we're buying then, so I just better let it go. There we go. Just want to see when does point B gets completed. It's when we're above these highs. I'm just gonna let this run, guys. Really, because it's gonna take a while. There we go. It is respecting this high right now, meaning that this point A is not valid. Right, we need a new point A. It's right here. And point B will be probably or underneath these lows or here or full continuation to the downside. But let's say it is down here, right? Now in the 5 minutes, we can see prices breaking down lower, right? I was not in time to catch this as it was playing down on the 1 hour. But maybe we can get a bit of a better entry still. Okay, moving up higher. If we break down lower, we can do something. Still the same entry, but our stop loss is a lot better. Like this, maybe perfect the entry a little bit. Point B can be here. Let's just target somewhere in the middle of that zone. Place the order. Looks like again a new low is being respected. Maybe my point B was not on point enough. Could definitely be. Let's place a stop loss on break even anyway. It moved down lower quite a bit. And of course, in real life scenario, you would definitely close here, but let's just see what it does. And backtesting, okay, takes us out of break even, could be a good trade. But this is basically how you backtest, right? And then also, like I said before, the screenshot on the side, that is also how I backtest, because this just keeps you focused the best way. And it also keeps you on track, making sure that you execute every single trade correctly, right? So once you've proven your system here, and really I want to see like at least 50 trades that you've taken, but preferably over 100, then you move to live execution. So, backtesting, super important. After this, we will go into how to create your first account. But remember, the Pro Firm cheat code is coming after that. And once we have talked about all those essentials and we went in depth, then we will go over your trading psychology. That will be a very, very big module. But once you understand that truly, I'm 100% certain that trading psychology will not be an issue for you anymore. Once you have done that, we can go in depth again by talking about the best trading pairs, talking about your trading routine, and also some mistakes to avoid. So make sure you keep locked in, make sure you're taking notes, and let's go on to the next one. So now you're going to open your first account. Again, you can do this on demo, just on MetaTrader, or you can set up a broker. That's what I would recommend because it also gives you a bit of skin in the game. So this is testing the waters, right? It is not where you get rich. It is literally just getting familiar with trading, getting familiar with all the setups, plus also making sure that you are going to build a bit of a record on a live account. Now, how to trade a small account properly. If you treat a $100 to a $500 trading account like it is supposed to change your life, you will lose it because you're very money focused at that point, right? You will overtrade, you will oversize, or you will force setups. Now, this account is not for making money, right? It is for proving you can follow rules, practice, and get some skin in the game. So the goal then, logically, is not profit, right? The goal is consistency, execution, and discipline. If you can't grow a $500 properly, you won't grow $50,000 either. Now, the hard rule is the non-negotiable. Risk per trade needs to be 1 to 2% maximum. All right, so if you're trading a $500, just risk $5 to $10 a position. It is just for learning, right? Once you get a bit more familiar, you can maybe scale this up on a personal account to 3 to 4%. That's completely fine, but especially in the beginning, 1 to 2%. Now, max trades per day, 1 to 2, right? Do not go over trading modes right here. Just keep it to 2 trades a day max, and that's it. Now, only A+ setups. Use your grading system, right? Again, have it open like you did on backtesting as well. Have it open to the side and use this. Constantly look at this and make sure you're following it. Now, stop trading after a rule break, okay? If you break a rule or if you execute a position that is not an A+ setup, stop trading because then your session is done. Now, to do this properly, you need the right environment. So this means that you need low spreads, fast execution, and the ability to size properly. So small lot sizes. Not on every broker you can trade small lot sizes. So you need a broker that has market lot sizing, clean execution, no unnecessary friction, and strong customer support. So if there is something up with your money, you can always contact someone. So recently I partnered up with a broker, TMGM, right? This is the broker that I recommend trading because it ticks all of the boxes. And as it is a partner of the channel, I really put my trust into them. This is a QR code that you can scan, or also of course a link in the description that you can use. Unfortunately though, it is not for US-based clients. So if you're US-based, you need to search for another broker. But if you're anywhere else but the US, you can use this broker. So you can scan this link, make an account, make your deposit, and start trading. It is really that simple. Plus, if you sign up through my code, you can ask all of your broker questions inside of our community because I have my personal manager at TMGM that will help you with all of your questions. So again, strong customer support ticked off as well. Now, this will feel slow, right? If you're starting with 100, 500, 1000 bucks, it will feel very slow. But what counts are small wins, small losses, and no excitement, because that is exactly what you want. You want to keep it as small as possible so that you're also protecting your downside as much as possible. Now, once you can follow this consistently, you can move to a prop firm or you can scale your capital. Some people, they have a lot of money saved up or they have a high paying job, right? For them, I would say the most logical move is not really to move to prop firms. You can do it on the side, but scaling your capital is going to be the goal. Like no matter what, always. Also, if you're doing prop firms, it's just a step in between, right? Deposit it, but always keep risk in mind, of course, and start trading with that right away. That is what I've been doing for years, by the way. I've been making money with prop firms, putting it into my own capital, and now this year I will be trading with my own capital and basically scaling that up as much as possible. So now that you know how and why to journal, you know how and why to backtest, and how to start trading with your own money, let's see how you can use all of this to your advantage and maximum leverage prop firms to create more income potential with trading. Okay, so if you made it this far, you're in for a real treat. And this is because we're going to talk about the prop firm cheat code, right? I'm sure that this is hands down the best system that you can use if you're going to be trading prop firms. So the prop firm strategy that we're going to be talking about, how to actually pass but not just trade. Because behind passing prop firms the easy way, there's also a whole system. Now, why challenges are different, right? Taking a challenge is not the same as normal trading with a broker. Pressure is higher, the rules are stricter, and mistakes are punished faster, right? One bad trade can literally spiral your mind and end everything. Also, they're not cheap, right? They are pretty expensive if you're buying them. Now, the real reason people fail is that traders don't fail because of a strategy, they fail because of pressure. Overtrading, forcing setups, and breaking rules when they get close to target. And the closer they get to target, usually the worse they trade. Now, which firms to use? Use firms with proven payouts and fair rules. These are some that I have used in the past, but I'm not endorsing any of them. Do your own research. You can use tools like PropFirm Match or whatever and see which one have the best rules for you. But like I said before as well, avoid the ones with the very big discounts all of the time. Okay? Now, system adaptation. Stick to your rules, right? When trading prop firms, they need to remain strict. So, at this point, really only take 8 out of 10 trades or higher. Protect your drawdown, reduce unnecessary risk, and increase your quality as much as possible. When you're trading prop firms, survival comes before activity every single time. Okay? What goes for your trade pacing is that you don't need more trades. You need better trades. So don't force daily trades. Wait for high-grade setups. Let the system control the frequency. And always remember this. No setup is no trade. If it is not an 8, it is not a trade. Remember from our previous segments, this also goes for your challenges. All right. Now, the prop firm cheat code. This is a golden risk management system that will literally change your trading forever. or at least with prop firms. So it is all about diversification of risk. Instead of buying one challenge, you buy at least 5. It is important that they are all the same size, by the way. So what you're doing is you buy 5, let's say 50K challenges. Can be with CFDs, can be with futures. And you go to the next account after each trade. If your proven win rate is above 40%, proven win rate, you get it on backtesting, you go to the next account after each loss, okay? Instead of after each trade. We do this instead of just buying a 200K account. It will be probably the same price. If it is on futures or on CFDs, it will still remain the same. Now, let's put an example of you're risking 0.5% per trade and you're taking 1 over 3 positions, right? So after 10 trades with a 40% win rate, you would be up 3%, which is pretty good, right? Pretty good. But then again, you also need to stay sane enough to keep up with this, right? Because now if you lose 3 trades in a row again, you're back to 1.5% and it just takes a long while. It can make sure that you're stuck in challenges for months. And believe me, I've talked to a lot of people that are in that stage. Now, with the system that we use, you have 5 accounts, so 5 times the risk. So you can also up your risk per trade. So per position that you're trading, you're gonna risk 2% instead of 0.5%. Now, if you're trading futures, you probably wanna keep this at 1% or 1.2%, not higher than that because you don't have a lot of drawdown. On CFDs, we can do 2%, meaning that the result of the 5 accounts, again, distributed randomly and distributed the same as these 10 trades right here, gives this result. 4% profit, minus 4%, 4% profit, minus 4%, 12% account passed, okay? Plus maybe even a payout if it is a one-step challenge. That is how fast it goes. So gratification will come a lot quicker as you will pass challenges quicker and there is a much higher chance of getting paid. And then you can use those payouts to do the same game all over again, right? Now, when it is going well and when it is going bad. When it is going well, you want to stay consistent. You don't want to increase your risk and you don't want to rush to the finish. When it is going bad, you have to stop trading temporarily. You have to review your journal and you have to wait for high-grade setups only. Now, most people fail when they're close to passing or when they're close to getting a payout. So really be aware of this once you're at that stage. And when it is going bad, don't try to win it back, right? Because that is really how you will fail. Now, the most important rules: only take 8 out of 10 great trades, never force trades, protect your drawdown at all costs, follow the system exactly, only 1 trade a day, because this is how you will pass consistently. Now, the great trading system was built for this. It filters bad trades, it removes emotional decisions, and it keeps you consistent under pressure. This is where it matters most. If you still want help applying this during a real challenge, inside of my one-on-one program, I guide you through this step by step. I review your trades, scores, and execution, and I help you stay consistent when it matters. Because I know I can give you all of this, but you still need to apply it correctly, and you need to be able to stick through with it long enough to make sure you're going to make money with this. If you have me in your corner, I am the one that makes sure you will make money with this. So now that you know how to tackle prop firms, let's see how Pedriak, one of my top students, absolutely destroys prop firms. Okay, so a bit of a background about the next segment. This is a coaching call that you will see that I had 1 month before Pedriak got $17,000 out of the markets using prop firms. So in this call, you will see his backtest results, the strategy that he's trading, and also us talking about getting his first payout and being able to quit his job when he moves from New York back to Ireland. And once again, I can say that I'm very proud of Pedriak that is now trading full-time and being able to pursue his dreams.
So I've been kind of going, it's just basically off the first 5-minute candle of 9:30 open on ES. I mark it out. I wait for like a break up high. Well, I look at liquidity levels as well first to see has there been any sweeps, has there like any spots that's been unfilled, etc. If that aligns, then try and move this.
1 over 3. So what?
Yeah, it's always 1 over 3. I looked this last. This was a loss. So I'm looking for this on the 1 minute. It breaks above. I have to test the midpoint and look for a positive reaction of it. Bullish candle. I'd enter here and it's a 1 to 3. Always between 4 to 8 point stop loss. But it's been quite profitable in back testing. I'd have 24 here as well. About just under a 50% win rate. But you can see the profitability. Like had a slow start to 24 and then quite profitable after that. And you see how long I'm in the trades. That's what I'm looking for as well. I'm looking to try be in and out of the
quickly.
market. Yeah, but I aligned that with like the stuff I learned off you as well. Like this kind of suits like for work and stuff like that as well.
Yeah,
Anyway,
exactly.
because I don't. Well, I work from home now at the minute, but if I'm in the office, I can't be like glued to the screen.
So when you're at the office again, you will still be able to execute this strategy you just
Yeah,
like
yeah,
came up
exactly.
with?
Yeah. So I only need like, say, my validations is if it closes below.
So what are your like confluences that you don't enter trades?
Well, I look at the higher time frame first. So if there's already been, like, say, a liquidity sweep or something like that, then I wouldn't be looking to just say sell. If it's already swept and then on the time frame it's going down again, I think there's a high risk of a reversal. Then I wouldn't. But if it was to buy, then I would. If it just breaks straight through the midpoint, I wouldn't. If it goes up, like, just doesn't respect it, then I won't take it. And I need to close below the midpoint again. If it retests it, and the woman needs to close below. I use this past my top step account. Yeah, so I'm gonna move back to Ireland start of April.
Oh, really?
Yeah, I'm hoping that I can have like a few payouts, hopefully, just so like I won't need to be going working and I can do this full time as well. But
That would be amazing, yeah.
yeah,
Make sure that hope, so to say, doesn't cloud your judgment when you're trading. So the thing is, what I want you to do is get your account up to a payout, probably up to 5K.
yeah,
Let's say because you also need 5 profitable days to get a payout, and it resets every time that you get a payout. And then you're very, especially with futures, you're very quickly up over 1 million in funding. And you're just taking one trade a day, or do you have like the
oh yeah,
option to
no,
enter a new one?
no, just the one and done.
Okay, that's very good. So you have a lot of chances to get it right, so to say, if you're risking 750.
Yeah, that's what I liked, like as well. Whereas this it could have easily went just straight to stop loss, whatever, and I'm done. So either way, I'm done quite quickly. So I prefer that. You know what I mean, whereas if I lost this before, I'd be trying to enter again. Do I go long and next thing I just go back down and it's just a mess. So yeah, no, I'm getting better. And it's like psychology part of it.
Yeah, very good. What is the next step for you?
Well, first is I want to just, obviously, I need to just keep executing my plan whenever it appears, but hopefully try to get a couple of payouts. I don't want to make it about payouts. I mean, I need to just make it about following my plan, but then scale up. That's my plan.
Yeah.
And yeah, hopefully this year, well, the next couple of months, I can try to replace a job. I've saved up quite like a nice bit as well. So I think that's kind of helping with the psychological part as well. Like not needing the money.
100%, it helps a lot.
Because I was working quite a lot. You know, I was staying in the bar as well, straight after work and stuff. So I wasn't having time for anything.
What is it you're gonna do when you're back in Ireland? Let's say you do need a job.
Let's see. For me to get a proper job, I did my master's in finance, so if I was to get a proper job, I'd have to go like into like some sort of banking sector or accounting, but I don't want to do that. Like, so I'd probably just do it.
You have a master in finance?
Yeah.
You can also trade.
Yeah.
Firm.
I know, yeah. But I don't want to work for someone else, do you know what I mean? I just need to have some proof that I'm going in the right direction for my parents any more than anything. Because they'd be quite skeptical, I suppose. Yeah,
is that something you're struggling with at the moment?
At the minute, I would say no, since I've swapped to this sort of the way I'm trying to trade. But obviously, like there will be losses and stuff. It's just trying to have a matter of time, really, to let my trades play out and see if I can progress. I'm journaling every day now as well. So like, I think that's helping.
What are you journaling?
I'm journaling how I feel like during the trades or why I didn't take trades.
Good.
And then I'm also putting in like how much, or sorry, like just a percentage. Did I follow my plan? Yes, no. Why? Yes or no. Write down comments, write down my emotions. I'm not so much putting in like just a screenshot of the chart, but like just the actual motion of myself. Did I follow it? Blah, 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 write it down.
That's very good. Yeah, it helps a lot.
Yeah.
Keep me up to date how you're doing.
Yeah.
Also, if you have any questions, let's say you're up a certain amount and you're not sure what to do, just ask me.
Yeah.
And then I say, let's get that payout. That was such an amazing call. And again, I'm so proud that I can be a part of his journey where he became a profitable funded trader and is now trading full time. Now, let's dive into psychology because this plays a huge part to a trader's success as well. All right, we talked about a lot in this course, right? And now it is time to really hone in on trading psychology. So, trading psychology. And the thing is that if you're watching this video, you probably don't have a psychology problem yet. The thing is with retail traders, with people online, they blame a lot on psychology very, very quickly. Now, if you have a strategy that you do not trust, if you don't have a lot of data for your strategy, if you are executing different strategies all the time, hopping from strategy to strategy, believe me, you don't have a psychology problem, right? You probably have a strategy problem to begin with, or a confidence problem because you don't trust it, you don't have the data. Once you have the data, once you have the strategy locked in, then we can talk about having a potential psychology problem, but not before that, all right? So, like I said, the lie you've been sold, you need more discipline. And while that most of the time will be true that a lot of you need more discipline and you need to control your emotions, you need to be more patient, you need to stop overreacting, it is not where it starts, right? You're not fixing the roots of the problem. So I want you to have a look at this problem tree. The potential effects are overtrading, revenge trading, scared of execution, FOMO, right? The problem and the issue right here is that your confidence is affected. Now, the root causes are not having a clear strategy, not having clear rules, no proven data, and no personal journal data. So what I mean with that last one is that what you can have is that you have proven data for the strategy, but it has not been executed by yourself. You had an EA that did it, for example, or you're just using a strategy you found online with proven data, but you've never journaled it yourself. You also need to journal this yourself so that you're proving to yourself that you are able to execute this. Now, you will fall out of the tree back into bad habits and back to your core problem and the root causes, right? Willpower is unreliable in trading. So if you are all the way up here at the top, you will fall back down constantly to these root causes if they are there. So you cannot rely only on discipline to fix the potential effects under pressure, right? Because if there is money involved, your emotions increase. If your stress increases, your control decreases. So it's like a vicious cycle that you're getting yourself stuck in. Now, the real problem. The real problem is that there is no objective standard. So every trade feels like an opportunity, every missed trade feels like a loss, and every decision becomes emotional. No system equals emotional decision making, right? It is very important that you start to lock in on your system. Now, two things that can come out of that: fear of missing out and fear of position. So, first of all, the fear of missing out, we have a solution for that, right? If it is not an 8, it is not a trade. So, no score, no regret. FOMO only exists because you don't know what qualifies as a trade. That is why you're feeling FOMO if price moves without you, if you don't know what qualifies as a trade. Now, the fear of position, this can be being afraid to enter the position. This can also be that you're afraid while in the position or to exit it. The solution, you don't feel if it is good, you know based on the score. Again, fear comes from uncertainty. So the real solution that we have right here for all of your problems, in a way, at least for now, is setting high standards and clear expectations. All right? So I want you to have a look at this chart. High standards at the top, clear expectations in the right, low and non-existing standards at the bottom, and vague expectations at the left. So if you have high standards but vague expectations, you will have confusion. It will lead to a lot of wasted effort. If you have low/non-existing efforts, vague expectations, you will have indifference, disengagement. If you have clear expectations but low non-existent standards, you have underperformance. And if you have high standards and clear expectations, you have peak performance. So it is a system that removes decision making. And even though it can help in the short term, the long-term solution is not more discipline. You follow rules, not emotions. You execute and you not guess. You trust the process. That is why that grading system is so important, right? That is why we are introducing that. You will solve FOMO simply by filtering trades. You will solve fear simply by providing confirmation. And you will solve overtrading by enforcing standards. Now, it doesn't remove emotions, it makes them irrelevant because you're just following the system and grading your trades. Now, you don't need to feel confident to trade correctly, right? You get that by having high standards and clear expectations. And you get that by having the right system. So trying to fix psychology without a system will never work because you're trying to control symptoms instead of fixing the cause. That is why most traders stay stuck. So if you have a clear system, you're grading your positions, you have backtested data, you have a consistent journal, and you still struggle with emotions, again, think about how can I fix the roots of the problem. It will probably cost you a bit of time, and I don't know if you will ever find it yourself to find the roots of those problems if all of these ones are already fixed, because most of the time we see that these are roots coming from your childhood or some things that happened in life or maybe very early in your trading career. But again, think about how can I fix the roots of the problem. So, like I said, these roots are coming from somewhere way before trading. Now let's say you have your strategy figured out. In the next segment, I will show you some clips from a group coaching call that I hosted with my trading psychology, Alex. And he gives some practical tips, what you can do on how to improve your psychology the right way. By the way, this interview is over an hour long. I cannot show it completely here because then the calls will be even longer. But if you want to see the full thing, join the community, link in the description, and you will have access to the complete interview.
Yeah, so hello everyone. My name is Alex Morgan. I'm a mindset and performance coach. I generally work with traders and poker players. They're very similar. That's one of the reasons why I just got into sort of working with both. I also work with some entrepreneurs, some sports people, but mainly traders and poker players. And I guess the thing that would be different about the way I work is I work on the subconscious mind, generally using hypnotherapy, but using other techniques as well, because I think that most of our issues are to do with our subconscious, basically. And then, yeah, I guess they would be the main ways that I would work with people. I don't know what else to say, really. What else does...
No, I think you summarized it pretty good.
Yeah. So yeah, that's probably enough for now anyway.
So you were just talking about the subconscious mind and stuff, right? Can you please elaborate like how to develop a very good mindset?
Sorry, how to what? A very good mindset? I missed
Develop a very good trading mindset, like to get rid of fear of lose. Yeah, I have a few questions prepared. I just want to go through actually. Yeah.
Okay. Yeah. So I think one of the things that is quite underestimated is really seeing things in a longer term. So lengthening the time scales. People get way too involved in the sort of day-by-day results where you've really got to look at the longer term. That would be one thing. As I said, when I was sort of introducing myself, the performance side of it, I think, is very, very important. So the key things I would look at would be, are you meditating? It's a massive one. Are you sleeping well? And I don't just mean like, are you in bed for a certain amount of hours, but are you actually getting the right quality sleep? Nutrition, exercise, scheduling as well, making sure you're doing things. that you should do, that you want to do. So yeah, they would be good. I mean, people talk about focus, and some people come to me and they ask me about nootropics and all these other different things. I would just say the first thing you need to do is get the fundamentals, which I've just talked about, sorted out in terms of your focus. So yeah, they would be the mindset. In terms of the subconscious stuff, I would sort of say to you that you need to really, I mean, I don't know exactly what all of you are doing, but you obviously need to journal. That would be a good thing. But I think whilst you're trading, if you can actually either write down what's going on, the emotions that come up, and also the feelings that come up in your body as well. So bring more awareness to that. Now, if you find it difficult to write things down whilst you're trading, excuse me, another idea that I get people to do is to record themselves. So some people with trading will record the whole session. Other people, I literally just say to them, if an emotion comes up, just pick up your phone, or if you've got anything else where you can record yourself audibly, and yeah, just talk in your thought processes, your emotions, your feelings, etc., etc. So they would be, yeah, I mean, this is obviously working on your own. I think another thing that to do, which is very underestimated when I talk to people to start with, is actually using visualization. So using visualization to improve how you deal with certain situations. Now, a lot of people talk about visualization in terms of how well things go. So I'll just give you a complete sort of nothing to do with trading example. But if I was, say, working with a boxer, I wouldn't say to them, right, okay, visualize you getting into the ring, throwing a combination and knocking the person over, because unless you're in a complete mismatch of a fight, that's really never going to happen. I would get someone to visualize, I don't know, being in a difficult situation in a ring. So to put it back to a trading sort of scenario, you'd visualize something going wrong. How do you deal with that? How do you get around that? And so obviously, the way that our mind works, it doesn't know the difference between us actually visualizing and real life or things actually happening to us. So yeah, I mean, I could carry on talking, but I think I'll leave it there. Otherwise, it would take I'll take too long, should I say? But yeah, hopefully that gives you a bit of an idea of some of the things you can do and work on.
Yeah,
Yeah.
thank you so much. I've been hearing a lot like regarding the law of attraction, the identity shifting, and all those sort of stuff. So just want to get an idea from you as well, personally. And also a bit about the fear of losing trades and fear of clicking the buttons when I know when I need to, when the price is actually in the zone. I sometimes do neglect clicking the button sometimes. So any tips on that? Mainly the fear of
Yeah.
losing.
Yeah. Okay. So law of attraction, to be honest, I'm not really an expert at it, so I won't talk too much about it. To some degree, I sort of believe in some of the parts of it, but I think what happens is a lot of people just end up thinking, I don't know, if I just keep thinking that I'm going to be a millionaire, I will. That's the bit I don't really like about how people interpret it. But of course, um, yeah, there are some good things that people do in terms of, I mean, a lot of it is similar to visualization, I'd say, in some respects. So certain elements I am, but I think the way that people interpret law of attraction, I don't think is always that good, if I'm honest. So yeah, that's my thoughts on that. So the fear of losing, yeah. So I would say, again, you need to really write down what's going on at that time. So your thought processes, emotions, feelings, bring more awareness to it. But yeah, I mean, I'm not going to know the exact thing that's going on, but generally when I work with someone and we generally sort of would work on getting the emotion, which is, going to be something similar to anxiety or nervousness or whatever. And then I would need, or we would work through and get the feeling. And I don't know whether it's worth me just giving an example, Geordie. I mean, I don't want to keep talking and talking with the hypnotherapy. Yeah, okay, yeah. So, yeah. So let's say with that fear, let's say someone feels anxiety and I don't know, they feel a tightness in their chest. So what I would do is I would, in that case, get them into hypnosis, which is basically like a guided meditation. So it's just relaxing different parts of your body, almost like if you imagine like pushing aside your conscious mind so that we get access to your subconscious. And then once we're in that relaxed state, I would get you to get that feeling up by just saying to you, think of a recent time or any time that you felt that fear of losing. And then I would say to you, okay, when else have you felt that before? And your subconscious knows where to go. It knows, what memories are linked to that. And it's actually the feeling that links it all together. So let's just say, I don't know, you had a memory come up where you were a teenager, something went on where you were doing something at school, putting in loads of effort, should I say, and then something didn't work out. So then you're sort of thinking, your subconscious, right, okay, I put in the effort, it hasn't worked out. And then when we go back even earlier, because we're really looking for memories under the age of 10 generally, quite often between the ages of 4 and 8. And the reason why those ages are so important are because during those ages of 4 to 8, obviously it's slightly different for everyone, but just roughly, you don't have a fully developed conscious mind. And so everything that happens during that time just goes straight into your subconscious and can form your subconscious programs. And so it's almost like the way you see yourself, the way you see others, the way you see the world is through those times. And obviously teachers, parents, siblings, friends are going to have an impact. So what we do is we'd be working back through the memories, because I'll try and cut this sort of down a little bit. And let's say we get up a memory where you're 6 years of age, you have been working on a project at school, put lots of effort into it, and then for some reason you just, like it's a competition or something, and for some reason you haven't won it or things haven't worked out. Because you're 6 years of age and the memory gets stored through the 6 years, the person that's 6 years of age, that child, it's going to be very, very emotional. So that memory is going to have emotions linked to it. And so those emotions are going to trigger you whenever something else comes up that's similar. And the way it works is your brain is like predicting all the time. It's predicting and largely on past experiences. That's how it works, really. And so when something similar comes up, you're getting triggered in the moment during teenage years and then even in adult life as well. And so what you need to do is release the emotions, which you would do sometimes within a child work, sometimes by reframing it. So, you may do the inner child work if it's very emotional, but even the reframing, you'd look at it through your adult eyes and you'd say, okay, I put all this effort in, but kids do that all the time at school and don't end up winning the competition. It's just life. Maybe the teacher, I don't know, liked another child more or whatever way we sort of look at it. And so what happens is when you release the emotions, you don't get triggered by it, as I said, in adult life. And if you imagine, memories are very much like Word documents. So a Word document, you make changes and you get the latest version. If you actually reframe a memory and see it through adult eyes, you're going to get the version through the adult eyes, not the 6-year-olds. And so you no longer have that emotional memory, so you will no longer be triggered by it. So, I mean, hopefully that makes sense. I've tried to sort of cut it down a bit, but yeah, does that make sense in terms of an example of how to work on that fear of losing?
Yes, absolutely. Thank you so much.
Okay,
Got
no
great
problem.
insights. Yeah.
It was a very good answer. To also answer your questions real briefly, what goes to the law of attraction, I'm a firm believer in it, as it is basically just affirmations and envisioning what you want in life. Now, also like Alex said, just envisioning something or just affirmating something, just wanting something in your mind will not make it reality. You, if you want to, let's say, grow wheat outside in your field, whatever, God can make it rain or whatever, the universe can make it rain, but you still have to plant those seeds. And that is exactly how you should also approach your work. You should be able to work as hard as possible, or do all of the work possible with that goal in mind. And that goal in mind is then that law of attraction, because you're basically so focused on that one goal in front of you. Now, what goes for the fear of losing?
Sorry, Jordi, could I just chime in there as well? Sorry, apologies.
Of course.
Yeah, I'd say with the law of attraction, again, it's almost like rehearsing doing something. And the way that works is in the same as just general visualization. It means that when you come up against something, you don't, for example, get a fight, flight, or freeze reaction. So it's really rehearsing what could happen to put you in a better position so that when things do come along, you're more used to it because you've rehearsed it. You know, your mind doesn't know the difference between rehearsing it and actually doing it. So that's the kind of key thing. But yeah, totally agree with you. Sorry, go on, carry on.
Yeah, exactly. So that's the thing. People, if you've seen an interview of someone that is successful, which they almost always say, I've always been successful inside of my head, way before I was in the real world. And that's exactly like Alex mentioned. It is just a rehearsal. You are just doing the reps inside of your mind before it becomes reality. And yeah, that's like I said, if you believe in God or if you believe in the universe or whatever, you also have to ask for it. And asking for it is basically by just seeing it right in front of you and working towards something every single day. Now, what goes for the fear of losing? What's your second question? Of course, every fear, every behavior has deeper roots inside of you, and this comes from your subconscious behavior or subconscious mind. And working on that is a whole task, and I think it is pretty hard if you want to do this on your own. So I would really advise you to work with someone that knows about the matter. But we can still, of course, progress in our trading without doing this, even though I highly advise you that you work on this, because otherwise you're only suppressing the feeling. Now, working on this without basically working on your subconscious is by being smart. If you are afraid of pressing buttons, make sure you're not pressing buttons when you're emotional. So what do I mean by this? Use stop orders, use limit orders, use basically everything that you can in order to be as prepared as possible. So if you're trading, and I hope you do this, you make a morning outlook, you know where to enter in the markets, you know where you want to exit, you know basically everything that trade is going to do if you get the ability to enter inside of the markets. So why not make sure that you're already setting yourself up for success and making sure that everything goes right, and placing in orders, placing in stop loss orders, placing in everything where it belongs to be, so that you're not able basically to make that error once your emotions come across you. That makes sense.
Yeah, I think I'd add as well with that I think there's three ways to tackle issues. One would be consciously, so consciously wanting to do
good vision.
something. And then there's mechanical, which is really what you were just talking about. So an example in general life would be, if you wanted to lose weight, you just wouldn't have the food you don't want to eat in the cupboard. So I class that as mechanical. So that's the same as really the stop losses and whatever. And then the third one is subconsciously. So it's those three really. So yeah, if you're not doing, say, the subconscious work, you've definitely got to be doing the mechanical stuff.
Exactly. Yeah. So I think the mechanical stuff is easy to start with, and work towards working on the subconscious mind. Obviously, that was very valuable. Alex is very knowledgeable. Now, I will show you some segments from another group coaching call as well, where I also handled some practical strategy questions, psychology questions, and journaling questions.
I still have this problem that I don't respect my strategy.
Okay.
I'm strategy hopping. I become aware recently that how important is one strategy. So I already basically know what you're gonna say, but I just want to hear it from you. Maybe you give some perspective that I can see how important is to stick to one strategy. And specifically, last couple of days, I saw few trades on higher time frames, and all, I think two, they went well, but I didn't enter because it was not my strategy. So now I'm thinking maybe I should enter. It would be nice, and but on the other hand, if I if I'm entering something that's not my strategy, then the greed kicks in, and I'm creating bad habits. So what is your take on this? How important is to stick to only one strategy?
Yeah, it is. It is everything, especially now in the beginning, as that is the main problem. That you can start adding strategies whenever you have your strategy right now under control. That is when you can start adding more strategies into the game. But right now, you need to make sure that you control this one strategy, as if you're going to mix in all different factors in there, you won't have a strategy at all in the end. And what you want to do is you want to try and execute the exact same thing as many times as possible, because this is when your edge starts to kick in. Your advantage over the market starts to kick in, because you're doing the same thing over and over and over again. And if you are, even if it is just one thing changing about your strategy, you are basically trading a complete different strategy. So again, your edge is gone. I'm not saying having multiple strategies is bad. I think it is actually a very good thing, but this is in the later stage. If you have mastered your strategy that you're trading right now, you're not trading any trade that is off plan, then you can definitely add multiple strategies to that. Today, actually, I onboarded a new one-on-one mentee, and one of the first things he asked me, how do I know to stay? Because I told him I'm staying away of a lot of things, right? I see a lot of trades happening, but I stay away from them on purpose. And he asked me, how do I know how to stay away from them? And I said, I make it my number one priority to know what I'm looking for, to chase what I'm looking for, and to stay away from everything else. So literally everything else. So if, let's say, for example, I'm trading a liquidity grab with a market structure shift. I'm not, by the way, but let's say that is my thing. I'm not trading double tops. I'm not trading for value gaps. I'm not trading retests, break and retests, breakouts. I'm not trading anything of that. Even though I see them happening because I know them, I'm staying away from it on purpose because I want to follow my steps and follow my strategy. That's the thing. There are thousands of strategies out there that you can use. Yeah, maybe not thousands, but a lot of them that you can use, and they can all be profitable. It's all about you, how you trade it, how you treat it, and how consistent you can be with it. That's the main thing most of the time, is that people are not executing strategies consistently, and then they think, the strategy doesn't work because they, for example, they lose 3 trades in a row. Something we talked about with Rafik. He joined in. Welcome, by the way. And Rafik as well, he had some losing streaks in between his strategy. Now he's not strategy hopping because he knows better. But some of his losers in his losing streak were trades he shouldn't actually have taken, right? Trades that don't belong in the strategy. And even though you might think they do because they look very similar, if you just miss one thing, like the market structure shift, or you're not trading in the right area, you're missing a very crucial step of your strategy. So that's why it's important to write your strategy out. I don't know if you do you have written out your strategy?
Yes, I have checkbox, yeah.
And do you use this checkbox when you're trading as well?
I do, but sometimes I just don't.
Okay.
I see something good and I enter, like.
Yeah, of course, everyone, right? Make sure you have it on your screen, if that's possible while trading. So on
Screen.
TradingView. Yeah, so on TradingView you have an extension for this as well. Yeah, make sure to go through the checkbox literally whenever you're looking for a setup. I know it's difficult, but the more you try this and train this, the better you will get at it.
So is there any particular advice or some tips or anything else from this checkbox that we can use to stick to our strategy, or is it just a process where you have to, like,
Yeah,
be better?
There's a
1%
process
every
of,
day.
there's a process of doing it multiple times and trying to adapt, and also journal your trades, and then go over the journal and see, okay, did I really follow my checkbox, yes or no, and try to better yourself every day. Do you currently backtest your trades?
I do, and I asked you last time about it, and with FX replay, it's not the same. For instance, today I had a lot like a lot of time to. I saw the weekly, I saw the daily, I saw the four. It was all bearish. It was no problem bearish. So exactly at 9 o'clock, I entered short on the pullback, and it was 1 to 2 trade great. But on FX replay, when it's kind of I don't know. I don't have the same feeling like when I'm every morning live in the market. I don't know how to explain. I cannot reproduce the same in FX replay when I'm in trading view. So I use FX replay, but so many times I go back and I see I miss the trades that I wouldn't normally miss in trading view.
Yeah, maybe you're going through it too fast. Could that be?
Maybe, yeah, maybe I
Yeah.
start to slower.
That's what I also said,
go
I
slow.
think, last time, right?
I think
And
yes.
that's what you see a lot of times is that people, they don't act or feel the same way because it isn't the same way, right? You know, there is no money attached to it. It is all fake. It is all trading, all training. It's all demo. So if you're trading a demo account, or if you're trading or backtesting, you're not going to feel the same. That's completely normal. But what you, yeah, like I think I said last time, what you need to try to do is you need to try and emulate this as close as possible to the live markets, to the live conditions. So really take your time for this. Sit down and see, okay, what is the trade doing? Go to the higher time frames, lower time frames, really analyze, and then go through your trades. Now, I ask this because this will help you a lot with your strategy, and also not strategy hop them much anymore. If you're going to do FX replay and Notion on the side, or whatever, your checklist on the side, and you're going through this every single trade, again, you're training yourself to be more consistent with this, and to really keep yourself accountable to following this checklist. If you would do this only in the live markets, it will take you months and months and months for the same thing you would achieve in one day in FX replay, training wise.
Okay. Thank you.
I had the same experience. I don't know what your name is, but in the beginning,
Andrea.
Andrea, okay. I had the same experience. It didn't feel real for me, but then I started to only 1x the speed, the same speed as market speed, and that made me feel a lot more anxious, and it felt more real for me.
Yeah.
So, and when you combine it with live market, I think it shouldn't be much a difference for me. Anyway, so it helps me doing the FX replay and the live markets.
You see a lot of times that traders that backtest, they want to get in these results as quickly as possible, to gather data or whatever. But yeah, at the same time, they're not emulating live markets, and at the live markets, you're taking a lot of time to analyze the markets, to analyze the trades. And again, if you're not doing that in backtesting, you're missing a huge factor.
Okay. Maybe I can ask you one more question.
Go ahead.
You mentioned once about recording trades. I never done it. I don't know what do you mean record? Like do I record only the screen, or do I record myself also? And
both.
How do I do it? How you do it? What is the software do you use? How?
You can use any software.
But how do you combine?
Oh yeah, so the easiest that combines everything is Loom. It's called Loom, Loom. I think it is paid for videos over like 5 minutes, but probably it's not a lot. I think $5 a month or something. That's the easiest one, because you can literally just press a button and it starts recording your screen, camera, voice, everything combined, and it uploads them to the Loom website, and it is like unlisted, so only you can see it.
It's cloud service.
Sorry?
Cloud. It's a cloud, not on a computer. He's storing on the cloud.
Exactly.
Yeah.
And it's just, unless it's so only you can see it. And it's also what I use sometimes for my morning market analysis because it is just very quick. Now a free version would be OBS. It's like a streaming software, but it is a lot more difficult to set up.
Yeah, I
If
think
you
I
would go
tried.
that route, just let me know, then I can help you with it. But I think Loom is definitely the easiest one.
I will try Loom definitely.
Yeah,
I will
yeah,
try
it's
Loom.
what I use as well. And then you will have, yeah, I don't know if you are you using Mac or Windows.
Windows.
Windows. Okay, then I don't know how it looks like, but on Mac, yeah, Windows probably as well. You have like a little icon at the top where you can just press it and you can start recording right away. Now it is important to also record your voice and face basically, so that you can also see your emotions, what you're feeling, and what I like to do as well is talk to, yeah, in most cases I'm talking to you guys, but talk to myself. You can talk to yourself, and basically just walk yourself through a little bit what you're seeing, what you're looking for, what you're wanting out of the markets. You will first keep yourself accountable, but secondly, you can also then go back to these sessions and see how you're feeling and basically feel the undertone a little bit about your emotions as well.
How
Should you
much
do this?
Yes. Go ahead.
Should you do this in any stage of trading?
Yeah, why not? I would say for live markets, it is especially important or yeah, good to do this. But you could also do it for backtesting. If you mentioned that you are feeling the same things backtesting than live trading,
Yeah.
then yeah, why not? It is basically what hedge fund traders use on a daily. They're instead of, yeah, they're also journaling, but next to journaling, they're almost journaling themselves by recording the sessions. And this basically comes from sports. So high athletes, they also have coaches. They record the matches, basically the football matches or the basketball matches, whatever. And after the game, they go in the locker room and they go watch the match back and see, okay, where can we improve? What runs can be better? Whatever can we improve on? And the same thing goes for you in the live markets. Whatever can we improve on, even if it's 1%, and you can find it out by watching those recordings back.
Yeah.
Okay. How much that really helps? I never tried it. Is it good thing?
It helps. I always say that the journaling is the number one important thing of your trading, and it will make you profitable the quickest for sure. And this is just an added extra to that to help you with it. But of course, it only helps if you're also reviewing it. So set some time apart to review it as well. And you only have to review the parts where you're actually doing anything, of course.
Okay, great.
So that was it for the insights and the group coaching calls. I hope you enjoyed. Now, let's finish up this course. Now it is time to again go in depth and finish up this course. So we also need to know which trading sessions we can trade. So we will have a look at session management. The best hours to trade give the best opportunities. Now, why this timing matters? The market is not equal throughout the day. Some hours have movement and opportunity, and some hours have noise and randomness. Trading the wrong time will equal you forcing trades. So I want you to have a look at this, and let me bring it on screen properly. Right. You have the London session and the New York session. These are basically the two sessions I want you to focus on. The London session is from 9 a.m. till 5 p.m. set time, and you can use this time zone window, or you can search it up yourself on Google to find out what time that is for you, right? So London starts at these times, New York starts at these times. Then we have New York session, 2 p.m. till 11 p.m. set time, all right? So for the London session, the open is the most strong volatility. The best window is most of the time the first 1 to 3 hours. And after that, it will become slower and it will become less clean. Now the New York session, we also have an overlap between New York and London, right? That is most of the time the best movement, right at that opening from New York session. Now after the overlap, there is less structure. Now, two very important rules are the no trade days and the max trades. So some days, the best decision is not trading, right? Because not every day is tradable. You will see low volatility, choppy/sideways structure, and most of the time there will be major news events coming up later that day or the day after. Now, no setup above 6, definitely no trades, right? No clean structure, also no trades. No clarity, no trades. And I want you to remember that doing nothing is really part of the system. It is probably 95% of being a trader. Now it goes for your max trades. I really want you to limit your trades, and on purpose, to protect your capital. This prevents you from overtrading, from forcing quality, and this will keep your focus sharp. So one high-grade trade beats 5 low-grade ones. So in general, you want to stick to 1 to 2 trades per session max. You want to be trading only New York or London. If you're trading both New York and London, then you want to stick to 1 to 2 trades per day max. Okay? Basically, this one applies for both of them, right? Now, most traders lose money on days that they should have stayed out. And that is very unfortunate because you're basically just losing money even though it would have been a break-even day, right? You would have not lost anything. And the system doesn't just tell you when to trade, it also tells you when not to trade. That is the most amazing thing about it. So a low score equals no trade, bad session equals no trade, and no setup, obviously, no trade. So no setup, no session, no trade. So now that you understand when to trade and when not to trade, let's have a look at the daily routine you need to master to become profitable. Hey, it's me again, checking in one more time. Did you already like, leave a comment, subscribe? Again, it would really help me out much more than you think. And I would also love to read your comments and leave my thoughts on it by replying. So if you haven't done that already, do it right now. Again, thanks a lot in advance. Alright, before we get into the daily routine, I want to take you with me through the pairs to trade. Or these are the ones that I think are the easiest to read and also the easiest for beginners. I want you to remember that not all markets behave the same, right? Some will be very volatile, others will be very slow, and then some are just right. Now, your results will be influenced by what you trade, and every system works better where the market is clean. So some pairs will give you clean structure, and some pairs will just give you noise and manipulation. On that note, some pairs are making trading harder than it needs to be, right? And you are adding difficulty for no reason. High spread, unpredictable movement, new sensitivity and poor structure, it's simply not worth it. But then there are also some good pairs. And these are based on personal results and also results I see from students trading with them. Euro USD, NAS 100 or NQ, ES and gold, they provide clean structure, reliable liquidity and consistent session movement, right? You know what you can expect. And I want to make clear that the system doesn't change, right? The environment does. Your bias will always be required, your levels will always be required, your liquidity is always required, your confirmation is always required, and risk is also always required. Now what changes is how clean those signals are, right? And some pairs just require more patience. Slower pairs, you need to wait longer. Volatile pairs, you need to have stricter confirmation or you will literally get burned to the ground. Of course, your results are not only influenced by what you trade, but also by how you trade, right? This brings me to the following. Focus. Focus is so important, especially in trading. Also, bringing your focus on just 1 to 2 things will be major. Don't trade everything, right? There is literally no point in doing that. 1 to 2 pairs is enough. And sometimes if you are trading more like a swing trading strategy, maybe do 5 to 6 pairs. But don't overdo it. Don't put 24 pairs on your trading view and trying to watch them all, right? Just 1 to 2 pairs and learn their behavior. And this then will build familiarity. So more pairs often will lead to less focus and this will often lead to worse results. So master a few and don't chase many. Now, most traders, they don't lack opportunity, right? They lack focus. So trade fewer pairs and trade them better. Now you should have everything you need to get your first payout. But it is also important that you know how to scale once you get that. Now, before we get into scaling, I need to go over a couple of things first, like the daily routine, the map system, and the 5 big mistakes. We need to know them before being able to continue to scaling. So let's get into the daily routine, because planners, they win. Now, the daily routine, right? Consistency is really built outside the trade, right? I always say how you do one thing is how you do everything. So if you show up to the gym consistently, if you have a normal diet, or a good diet, better said, a healthy diet, if you're not glued to your Netflix screen every single evening, right? These are all very important things. Now, why routine matters? Because the system only works if you follow it consistently, right? And that is a skill. That discipline to follow that routine to follow this consistently is a skill, right? Otherwise, you will fall back to where it all started. No routine, random execution, inconsistent results. And the structure creates consistency, right? Not motivation. So what I want you to do, pre-session, before the session starts, mark higher time frame buys, right? Your daily and your 4-hour. Draw your key levels, open your journal, open your news websites, and put your recorder on, right? I really want you to record your trading sessions so that you can watch it back. You don't have to use it or share it on social media, but at least record it for yourself. You prepare before the markets open, not during, okay? Now, let's have a look how I do this in practice. Very, very simple. This is an example of one of my gold positions from last month, right? This is a daily that I'm analyzing, then the 4-hour, then the 1-hour, the 15 minutes, and then the position, right? This then was a losing position apparently. But this goes to show I make a complete presentation on everything, right? Also how I feel, what I think. I open my journal. The journal that I showed you before is what I use for my entries as well. I open my news website, so I go to Forex Factory, right? I check the news very, very quickly if there is something coming up. Then I go to Bloomberg.com because I like to stay up to date with what is happening during the day if there is something coming up. Very important things that I do right before my session. Now, secondly, during the session. So during the session, I grade every setup before touching the mouse, right? Before entering buy or sell. And if it's not an 8, it is not a trade, right? So I have this doc open like I showed you during the backtesting session on the right. And this is what I do, right? I'm grading my positions, the positions that I want to take. I follow the system exactly, and I write down what I see, okay? I also write down what I think and feel. Again, if it is not an 8, it's not a trade, okay? Then we have our post-session. After the session, I'll log all my trades, I record the final grade and the outcome, and I write one key observation about this session. I also write down my thoughts, okay? And this is a good one to remember. Small improvements compound over time. Just get 1% better every single day. Then I do my weekly review at the end of the week. So end of the week, I look for my average trade grade. I look for my win rate on 8+ trades. I compare my high versus my low grade trades. And I identify one pattern that I want to improve. And this is really where real progress happens. So go over your journal and look what you have been doing for the week. Because a lot of traders, they just forget to do it. So traders who skip parts of the routine are the ones who stay stuck, right? Skip journaling, you will have no awareness. Skip the review, there will be no improvement. Skip the preparation, there will be bad execution. It's not the system that is failing, right? It is a lack of structure. So the real progress, this is really how consistency is built. It is a vicious cycle, right? You prepare, you execute, you review, you improve, and you repeat, right? Always go in this order and always try to follow every single step. I want you to really think about that you're not just taking trades anymore, right? You're preparing like a trader, you're executing like a trader, and you're reviewing like a trader. Right? Really imagine that you're on a trading floor, locked in, doing your best and making sure that you are performing as best as possible. Now, the most common mistake is when you start to treat trading casually, right? No plan, no structure, no review. You can't get professional results with a casual approach, okay? If you don't follow the routine, don't expect results. So now that you have the system and the structure to apply, let's see how the map system can help you even further. All right, so now we're getting to the map system. The map system is basically what I use to make sure that traders win. So, map system, MAP, what actually gets traders funded. By now you understand the system that we use to trade. You know how to create trades, you know how to execute, and you know the routine. But knowing is not the same as doing it consistently. Now, most traders, they don't fail because they lack knowledge. They fail because they drift, they stop tracking, or they break their rules under pressure. So this brings us to the real problem. That is consistency, right? That is why I use the map system. That is what I use to make sure that mentees win. But you can also make your own version of this by applying this to your trading buddy. And he applies this to you, right? So MAP, monitor, accountability, profit. Let's start with monitor first. Every trade should be tracked automatically, right? I don't want you to, best case scenario, I don't want you to do this manually because this is now adding friction to the whole journaling part, right? So tracking it automatically removes the friction from this. Again, if you want to journal, check out the one on the description. If you want to be able to do this automatically, join the trading floor. Now, your broker sync goes automatically into your journal, right? It brings your real-time visibility and your mistakes are caught early. So your bad habits, they don't go unnoticed, right? This is very important. Now, the A from accountability. You need to have frequent contact. If you are my mentee, you will have very frequent contact with me because I need to make sure that you're not drifting. So if you're trading with a trading buddy, for example, you need to have very frequent contact with him or her so that he or she is not drifting and you are not drifting. So not monthly, not occasionally, frequently, as good as daily, right? The traders who checked in daily were the ones who got funded every single time. This is a very big fact. Now, P from profit. The outcome of doing the first two correctly. Really, if you do M and A, P comes automatically. You follow the system, you track everything, and you stay consistent, right? The payout follows consistency. These three only work together, right? A system without a journal is basically guessing. A journal without accountability is inconsistency. And accountability without a system is no edge, right? You need all three. Now, most traders, they try to do this alone, right? They start strong, but they drift. They fall back into old habits. And I've seen this so many times that so many traders, they start and within 6 months, they already quit, right? Don't let this be you. If you really want this, commit to this and really go all in. Make sure that you're doing everything in your power to get profitable, right? It is not because people are incapable. It's because there's no structure or support system around them. That makes it just very difficult to do this on your own. Because trading in general, it is not something easy that you do, right? It's not something that you are going to figure out on your own in a couple of weeks or a couple of months. It takes a lot of time, especially if no one is in your corner. And also, this is the very big reason that I do one-on-one coaching, right? I monitor your trades, I keep you accountable, and I guide you through the challenge so that I make sure you're getting profit. So, if you're watching this video, you at this moment have two options. You try to apply everything yourself, or you follow a structured system that I gave to you right now, also with guidance. If that second one is what you want, you already know where to go. First link in the description. Get in an application to talk to me. If we think we are a good fit, we can proceed and talk about the next steps. So now that you know the importance of the map system, really, don't just look at this. Build this out for yourself, okay? If you cannot build this out for yourself, contact me. Let's have a look at the 5 biggest mistakes that traders make implementing everything we talked about the last few hours. So, the 5 biggest mistakes. Here they are, right? You want to avoid these at all costs. Now, the 5 mistakes that kill consistency, they are not beginner mistakes, okay? Because these mistakes are made by traders who understand the system, but they apply it incorrectly. And really, this is where most people fall off, right? Because it is a lot harder than they thought. What I see is that most people don't fail the system, they misuse it. Now, let's start with mistake number 1. Retroactive grading. This is when you're scoring the trades after deciding to take it. Okay, you put in the trades, you press buy or you press sell, and then you think about, oh damn, what would this grade be, right? This is not how it works. Your decision already was emotional, right? And now you're just using the grade to justify it. You are always going to find a way to make this 8 out of 10. While in reality, it's maybe a 4. So the grade must come before the trade. Very, very important. If you grade the trade after, the system is literally useless. Now, you're lowering the standard. This is when you're taking lower grade trades after a few wins. You might take a 7 or sometimes a 6, right? Because your confidence increases and your discipline drops, your standard slip. I want you to make sure that the standard does not move. Never, right? A 6 out of 10 is still a bad trade, even after 5 wins. I don't care, okay? If it is not an 8, it is not a trade. Now, mistake number 3 is over trading slow sessions. This is when you force trades when nothing is there, right? You take entries because of boredom, and this low volatility will always lead to bad setups. So a 4 out of 10 in a slow market is still a 4 out of 10, right? No setup, no trade. Learn to be bored. Mistake number 4 is stopping the journal, not logging trades consistently, not tracking, no feedback and no improvement. Even if you have synced it and you are logging it consistently now because it is automatically, where you're not looking at it and you're not improving on it, there's no point anyway, you're not journaling, okay? Every trader who stopped journaling drifted, always, or they stay stuck. Mistake number 5 is going quiet. This is especially important when you're doing the map system, right? This is when you're disappearing from accountability. No check-ins, no pressure to perform better, and old habits return. Every trader who drifted went quiet first, right? Silence, when you're trading with a group, when you're trading with a mentor, when you're trading with a trading buddy, is really the first sign of failure. I want you to notice something. I want you to notice the pattern, because the system, it is not the problem, right? The execution is. Small deviations equal big consequences. So again, use the map system to your best advantage, because this is why structure matters, right? Monitoring catches these mistakes early. Accountability prevents drifting. These two will make profit, but you also need a system to keep your standards high. Without this, consistency breaks. Okay, so now that we handle all of this, now it is really time to look how we can scale after a payout, because this will 100% help you get your first payout, but having a payout is nice, but making a lot of money is way nicer. So let's get into scaling after a payout. All right, scaling. So passing a challenge really is the beginning, right? It is not a goal. And most traders, they focus only on passing and then they lose everything after, okay? Because they get funded, then they relax their standards, or the pressure gets way higher right now. And both scenarios lead that they lose consistency. Now the real game starts after the payout. So after your first payout, what to do immediately, right? You need to protect the capital, because you're gonna feel pressure and you're gonna mess that up. We don't want that. Now make sure you don't increase the risk. If anything, decrease the risk, okay? And don't change your system. If it is not an 8, it is not a trade, follow this religiously. Now you wanna scale using the same system. And then you wanna run multiple prop accounts. You go for higher account size challenges. You use the grading system as your filter. You copy execution across accounts by grouping other accounts together. So what you can do, right? As the account size increases, the risk matters more because there's more money on the line. So these bigger accounts, right? The 200Ks, the 100Ks, they can give more dollars in return, but they're also more expensive. So what you then do is your risk is gonna be smaller, because we don't wanna risk all of this on $1,000 or 1,000 euros, right? You need to have more selective trades. You really need to be very, very careful with this. You really need to protect your capital over chasing gains, and you need to scale slowly. The slower, the better, believe me. Now, bigger accounts, they require more discipline because of the reasons that I gave before. They are more expensive and they can give more money in return. Also very important, let's say you're trading right now a 50K account. What you want to do is you want to stick to 50K accounts for a while, okay? You want to use your first payout to make sure that you're buying more 50K accounts. Then you can do that whole prop firm game that we talked about in the beginning all over again. So the ones that we had right here, right? You can go to this again. Again, you can buy, for example, 5 new 50Ks, try to pause at least 2 or 3 out of them, and you can make a new group in your funded accounts. Then the funded accounts, you're also going to trade like this, right? One funded account is group 1, group 2, group 3, group 4, group 5. And that is exactly what you're going to use to scale. And in this segment, I go even deeper on how to scale up at the right frequency. So first challenge right here, it is very important that you're starting small. I made so many mistakes in the beginning and also on this part where I was just going for 100K challenges constantly. And at this time, I was also still working a job. It was like 1/3 of my salary per challenge. Really insane when I think about it. So we want to start small. I like seen before, we want to have 3 profitable months on demo first so that you know your numbers, you know the rules, and now it is really time to put some skin in the game and get some challenges. Why are we starting small? Like I said, first of all, to preserve our own capital, right, our own money in the bank, and not spend all of our money on challenges. Very important. The second thing is that your first challenge, it is not about the money at all. It is literally not about performing at all or about returning at all. It is all about learning how to trade under pressure with real consequences. If you started with a small account instead of a demo account, you tipped your toes in that water already a little bit. But now it's going to feel a lot more real because you're trading with a lot more capital. And if you've been trading completely on demo, then I promise you it will feel very, very different. So we want to start small and we want to keep the cost of learning very small. So on CFD firms, so the forex firms, it will be around these prices. For 25,000, 10,000 is from ftmo. They're the most expensive ones, but also the pro firm with the best reputation. This is Apex on futures. They always do these discounts. That's fairly cheap, but if that is not a discount, a 25K challenge will probably cost you around $50 somewhere else, right? Now, very important is that when you're in this challenge, treat it exactly like a funded account or your own $25,000 that you've put on the line. Same risk per trade, the same process that you're following, the same journaling process that you're doing, and very important that you're not gambling, okay? Even though it just costs you $20 to get this challenge, do not gamble any of this away, because this will print a very wrong mindset into your brain. So make sure to lock in. Now, your target for this first account is very simple. I want you to get your challenge fee back. That is only going to apply on CFD firms, and even there, not all of them. But if it applies to you, let's say you're going with FTMO, just go for a very small payout, right? If it is a 25K challenge that you're having, go for a $500 payout, plus you get your challenge fee back. At this moment, you are literally trading free money. Okay. Now on futures, I want you to get the minimum payout, right? Some prop firms, they have this hidden second challenge in there where they ask you to create a buffer, right? Create a buffer of 1K or 2K or whatever, depending on your account size. Make sure you get this buffer, and then again, an extra $500 or $200, $300, and you get the payout. Very important to do this, right? Don't go for these massive payouts right away. I just want you to see that it is possible, that you can get money out of there. Plus, I want it to be risk-free inside of these challenges. Now, a practical tip is to pick one firm, right? Master one prop firm before expanding to others. Stick to the biggest prop firms and avoid prop firms that constantly throw with discounts. This one is a bit going against what I said with the Apex accounts, but this is just how they do business in a way, I don't know. And the challenges never cost this much. So they're giving very big discounts, not the best firm to trade with probably, but especially on CFD firms, if they're throwing constant discounts, stay away from them. Now, why stick with one prop firm and not diverse risk by choosing multiple ones? I don't want your head to be on every single trading platform. I don't want your head to be on every single prop firm. Just keep it all in one place, keep it focused, and then we can start expanding. Then we come to step 3, right? The scaling cycle. And this is where it really gets interesting, because this is already the part that most beginning traders never reach. And it's not really because it's hard, but it is because they run out of patience or out of capital, because they blew everything on this step already. So the scaling cycle is really simple, right? You get your challenge, you pass the challenge and you get funded. Then you trade with proper risk, let's say 1%, and you lock in your first profit. Probably if you win your first trade already. Then you request that payout and you reinvest it straight away into new challenges. Now, this is a rule that I want you to remember, is that always have 4 accounts in your chamber, but never trade more than one of them at the same time. Probably even at the same day for most of you, okay? If you have 4 challenges, let's say today is Monday, I'm only trading challenge 1 and I'm only taking 1 trade this day. Then on Tuesday, I go to challenge 2 and I take the second one. Why do we do this? Because we want to diverse risk as much as possible, and we want to protect our downside as much as possible as well. And we want to protect our downside as much as possible because the market will humble you. Believe me, right? Bad weeks will happen, and if you're then trading all of your accounts at once, you're literally losing everything. And even though maybe it costs only like $100, these 4 challenges, or $1,000 depending if you're trading with CFDs or futures, still we don't want this to hurt your mindset, because then you have to go back to zero in these accounts, back to zero, let's say these were all funded, and go through the challenge phases again. So always 1 out of 4, also with funded, always 1 out of 4. Now, once you start stacking these accounts, you get more funded, you get more challenges. And by the way, always buy the same size of challenge when you're reinvesting until you're at 4, right? And then you have 4 funded, then you can go to 50Ks or 25 if you start with 10s. So once you start stacking these accounts, your payouts will also start to compound, right? Let's say these are all funded. First one is waiting for a payout, second one is waiting for a payout, third one is waiting for a payout, and the fourth one you're also getting towards that payout stage. Even if it is $250, $500, $100, right? Just get that minimum threshold in and wait for the payout. Like I said, it will start to stack, it will start to compound. So use these payouts as fuel and reinvest every single payout until you hit $100,000 funded. Now let's look a little bit at the compound math, right? 2 accounts at 25K funded, 3% a month. Let's say you have 4 accounts, 25K, 3% a month. It's already $3,000 a month. Okay? And this proves that you don't need much to make a living. You don't need these $100,000 accounts. You don't need $1 million in funding, right? $3,000 is already very nice. Now, very important to remember is that you always trade one type at a time, or funded or challenges, especially in the beginning. What I've noticed is that the mindsets are very, very different. And we don't want that more aggressive mindset to also be applied on funded accounts. So always one type at a time. So let's say your funded account is waiting for a payout. then go to challenges. Okay. Now, step 4 is hitting $100,000 in capital. So again, to remind you what it actually does for your income, let's do the math a little bit. Let's say you have $100,000 in capital times 3% times, most of the time you will have also an 80% split. It will literally give you $2,400 net a month before taxes, of course. And for some, this is enough to replace a 9 to 5. And for most of us, if you're living in a more expensive city or a more expensive country, it is definitely a very nice extra on the side. If you do this times 2, you can probably replace your 9 to 5 as well. And if you don't think that this is much because you've been thrown 10K a month, 20K a month, 30K payouts your way constantly on Instagram, you're right. Like I said, it is a nice side income. But 100K funded is also not the finish line, right? It is just the beginning, because this means that your cycle works, right? It means that you're running a system and that you're not gambling. Consistency is the key right here, because now you've passed multiple challenges, you've managed multiple funded accounts, and you're literally navigating a real market with real money. And that will be a completely different trader than you were before starting this. So once you start to scale, I want you to create groups. And at this stage, you're basically going to copy your trades across 3 accounts or 2 accounts, right? But you need to have multiple groups before you can start this. So where you first had just 4 accounts, now each account will represent a group. And this is how you scale without changing a thing from your risk or from your strategy. This is the key to having a complete growth system. Now, the realistic path that I really want you to print in your mind is that this is not instant, okay? Your first payout will be small and it needs to be small. Then I want you to build consistency over months, right? Get small payout after small payout. Then we will look at scaling, and we will do this very gradual. Now, the real income really comes from consistency, not one big trade, not one big payout, okay? The most common mistake that we see is that you get overconfident after success. You're then lowering your standards, maybe taking worse trades and breaking rules, okay? Really, one trade does not mean that you have mastered the process. The standard does not change after success. The same rules still apply. A+ trades only, journaling everything and following the routine. Super important. So this is the process, right? One first small payout, then a lot of small payouts by grouping your accounts together, and then you will build a system that brings you consistent income. So we're almost done. And now that you also know how to scale, or at least the pace to use in scaling, you're ready for the final module. All right, the final module. Before we start at this one, I really want to thank you for your time, for trusting me that this video was going to be valuable. And I hope I lived up to those expectations and this video was very valuable. Now, the real progress really starts when you take this module seriously, because you will get funded guaranteed. So this is the opportunity that I want to talk to you about, right? Right now you have everything you need. But like we said before, knowing everything is not enough. So if you made it to this point, I know you're serious about trading, and I know you're not just consuming content, right? You are willing to learn properly, and this really puts you ahead of 99% of traders. So you have the full system now. You know how to grade trades, you know how to execute, you know how to track and how to stay consistent. And literally everything to get funded is in this video. But the one thing that this video cannot give you is someone watching your execution in real time. Even if it is a trading buddy, it is not someone that is 10 steps ahead of you. You need someone that catches your mistakes early, that sees the patterns that you don't notice, and that will keep you accountable daily. Because that is where most traders fall off. So if you're really serious about becoming a trader, about making money with this, and maybe sometime even making this your full-time job, you really need to pay attention to this one. Because this is exactly what I do in my one-on-one program. I give one-on-one guidance through Zoom calls, me personally, and this will be every other week or every week. It's not outsourced to some sketchy other coaches, and it's not just group calls or a Discord server like most of these offers are. Okay, it is really like this, but then you can also talk to me, right, on Zoom. As you can see, this is, for example, a Zoom call that I had with one of my mentees. We were going over his second batch of 20 trades, right, where he was journaling that. You will get my WhatsApp number. You can ask me questions. This is Morgan. He was 110K funded at that time. It was his end of year goal. He smashed it in 4 months. This is a shared dashboard that we have. This is even an old version because the one that is coming now is even more next level. And I want to add to that there are limited spots. I only take 4 to 6 people on every single month because I give focus and direct support. That is only me running this show, okay? Now, if you cannot book in a call using the first link in the description, This means that the spots for the next 3 months are filled. If you can book in a call, we have open spots. Okay? So I would say check out that first link. If there is an open spot, it is definitely worth going on a chat with me and see if you would be a right fit for one-on-one coaching with me. Now, like I said, there is a guarantee. I give you the guarantee that you're funded in 12 weeks and you get your first payout, ready to get that momentum going, or we continue working until you are there. So literally, this is guaranteeing that I learn you how to fish. I coach you one-on-one, I learn you how to fish, and I feed you for life. Right? That is a guarantee that we're making here. So if you want help applying everything that we talked about today properly, apply below in the first link in the description. Now, once again, I really want to thank you guys for watching, for taking notes. I hope you found this valuable. If there are any more questions that you have, you can leave them in the comments. I will answer every single one of them, or at least I will do my best. And then I hope to see you in the next one. Bye-bye, guys.